Good morning, everybody. Welcome back to another episode of the Market Open. We are here once again. It is Monday morning, Monday, May 5th. Happy Cinco de Mayo. Thank you, everybody, for being here. This is going to be a very, very exciting day. It is once again, for all that celebrate Palantir earnings day, Q1 2025 earnings. We will be having today. I'll be live at 3:30 Eastern Standard Time to begin the coverage on earnings. And then at about 4 p.m., we will get results and we will see what we've got going on in the world of Palantir. Going to be a big day. I'll be going through my earnings expectations today, talking about different previews and ideas and thoughts that I have in terms of what the company can produce. But outside of Palantir, we also have a lot of other news going on this morning, particularly in regards to tariffs. Obviously, that's something that is pretty important. And we've got some updates from last night and some updates this morning from different countries and their interpretation of tariffs. And we also have a pre-market that's relatively red. So if you look right here in the pre-markets, again, good morning, everybody. We are indeed red. Palantir that did hit all-time highs yesterday in the overnight markets at 126.4, something like that. 123.65 down about 0.51% right now. Robinhood down about 3% in the pre-market. SoFi down about 2%. Google down 1%. Meta down 1%. And then the broader S&P 500 is down as well, about 0.79%. Now, why are we so red? I mean, I don't think there's really that crazy of a reason outside of the fact that we've been green for 9 days in a row. And as a result, we have some people selling into that strength. So that's one thing going on. Number two is that we do have oil prices that are getting to kind of recessionary levels. We're not really there yet, but if it keeps going further down another 3-4%, we could get there. As OPEC is confirming a stronger output boost, which is really good for inflation because that means that less energy prices, more deflationary spirals in the context of energy, shelter, things that we've been talking about for a while that should be coming down. But it does warn people, hey, is there a lack of demand right here that could be causing a recession? So from that perspective, look, we've been green for a long time, 9 days in a row. It's going to be hard to go green 10 days in a row. Futures were red last night, probably off the idea that 10 days in a row, which hasn't happened in over a decade, would be a bit tough. But maybe there's a shot that we can get there. Also, yeah, we are typically red before FOMC results. JPOW will be speaking on Wednesday, and he'll let us know if we are data-driven enough to get some of those rate cuts. HIMS also has earnings today. HIMS is up 2% right now in the pre-market. So I know a lot of people like this stock. This one right here, 1.91%, 4160. This one in Palantir, it's going to be an explosive after hours. Two names that have done very well this year and obviously have big followings. So we're going to take a look at how that one performs after hours later today. But also Palantir will be reporting 123.64, down about 0.5% currently right now. Good morning, good morning, good morning. Thank you, everybody, for being here. Martin, what's up? Ricardo, Miss KM, I'm Beneficial, June, Nate. Thank you all for being here today. Seattle, JB, what's up? Blake, tariffs on films are going to hurt Canada. That was the latest Trump announcement. He's going to be tariffing all foreign films that are not made in the United States. I don't think it matters that much, but it probably will have some level of implications on the escalation of the trade war, even though I don't think it's going to be that big of a deal. We did have PMI come out as well. That's another thing that probably affected the broader markets, and that's why we're going a little red right here. So we came in at, today's Monday, right? Came in, oh no, we didn't. No, sorry. They're coming out later. Okay, they're coming out at 9:45. They're coming out at 9:45. So Monday, so 9:45, so that's going to be, yeah, in about an hour, we will get PMI, and I think we'll get a better understanding of what that looks like as well. The market's expecting right there 51.2 on global composite, which is going to be important as well. Natalie, what's up? Ian, Scott, Jonathan, Pavel, David, good morning, good morning. Thank you all for being here. Manny, Harvey, Cortland, thank you all for being here this morning. It's going to be a big day. Going to be a big day. Kenneth, Iceman, Jay, Custard and Chips, what's up? No mayo as always. I did not finish The Godfather, for those that are asking. Dude, we ended the Sunday stream at like 10 p.m. I was not going to stay up till like freaking 1 a.m. to watch it. So I went to sleep. Now, I'm going to finish it hopefully this week. It's going to be an everlasting movie that I eventually have to finish, but hopefully this week I will finish it. All right, Tom Lee, let's get started with him. He's bullish, and he's bullish for a couple of reasons. Let's get his thoughts, and then we will keep going from there.
Getting set for this week's Fed decision. Joining us now, Tom Lee. The peak tariff angst was hit when you said it was hit, and it couldn't it come back still though?
Joe, I do think tariff fears can come back, but the stock market and I think the macro is in a better place today than it was on April 7th. One is I think that the tariff expectations, even if we don't know what they end up looking like, are really much better than what we saw on April 2nd. The second is that the markets that lead stocks, such as credit and the VIX and high yield, are in a much better place. High yield has recovered almost all the widening that happened since April 7th, and the VIX is uninverting the term structure, which basically means the market for volatility is calming down. And then I think when we look at 2026, I think there is stuff to have some confidence about, because the economy is holding up better at the moment. And next year we can look forward to deregulation. I think the comparisons for earnings will be much better for next year. And then, of course, if we get some tariff policies that lead to exports, we have upside to earnings growth. So all in all, I think it makes sense that the markets have recovered to this point. But, the bar for recovering to all-time highs is, of course, higher. But I do think the risk reward is actually still positive here.
Yeah, I was thinking that too. You're probably thankful and gratified that we're back to where we are, but just seems like there's some backing and filling that's going to be happening before we break out to new all-time highs. Do you think with the tariff regime as it is, some of the comments made by President Trump over the weekend that why would, if these are temporary, why would anyone build a plant here? So that some of them might be permanent. I still think it's negotiating. I'm still not sure I take that at face value. But if it's a permanent regime of tariffs, you still think we get to new highs in 2025 or by 2026?
Yes, I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term. And that's still upside from here.
Speaking of Bitcoin, MicroStrategy did buy another basically 2,000 Bitcoin this morning. So they now have over 555,000 Bitcoin. I think Tom Lee's point there is actually really interesting. Number one, he's saying, hey, companies are resilient. So we're not giving enough credit to American companies for being able to weather the storm. I agree with him. However, those companies have not really gone through the brunt of the tariffs. And so that's kind of the kind of overarching argument here is like, hey, can we get to Q2 earnings without as much damage as people are expecting? But number two, he is right about Bitcoin. I mean, Bitcoin has started to turn into an asset class, at least so far, that is not really reacting the way it reacts when the NASDAQ falls. And so from that perspective, if you assume Bitcoin is at its levels where the S&P should be matching up to, S&P to 5,800 would be implied by Bitcoin at this current price.
Yeah, that was another one of your calls that it would catch up with gold, and it's lagged in the past. What about some of your good calls or accurate calls, Tom, have been based on inflation, and it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically, restart inflation, even if I don't know if restart's the right word. Maybe there is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see, maybe even not only offset the tariff inflation, but actually be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, so there's not really a wage pushing inflation. And I think the inflation data recently shows inflation is tracking lower than expected. The Fed has been on hold, and they're saying they're waiting for tariffs. But what's interesting is the ECB has been cutting rates, even though there's tariffs, inflation hitting Europe or soon to hit Europe. The reason is ECB's inflation measure, the HICP, excludes shelter. If the Fed excluded shelter from its inflation, core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
Yeah, I can too, but
it's a fair point, right? It's a fair point. We've been talking about it for a while that, hey, if the ECB is cutting and they've cut 7 times in a row, part of the reason they're cutting is because they're taking out shelter because they know that's eventually going to come down. And when you look at inflation minus shelter or CPI minus shelter, it becomes a deflationary argument that you can make for the broader equity for not only the underlying trends of inflation, but what that means for the broader equity markets and how they're reacting to some of the deflationary trends that we're seeing. And we're uniquely seeing that with oil. Oil right here, $57, down about 2%. It was at 54 last night. This thing falls below 53-ish, 54-ish. You're going to start getting people thinking, why the hell do we have rates, at 4.5% right now? So I think we're going to get the cut. We're not going to get the cut on Wednesday. We will get the cut probably in June. Hopefully it happens on Wednesday. It's not going to happen Wednesday, but it would be fun if we did. And then eventually when we get that June cut, I think markets will react positively towards it if the trade war is walked back and if the tariffs are walked back, which based on what Trump said yesterday about tariffing the foreign movie industry, he's definitely not walking back the escalation. But regardless, a deal with China, Japan, South Korea, et cetera, those are the ones that I think people care about the most. Okay, let's talk about Palantir. It has been a hell of a journey covering this company. It's always a bit emotional when we get into earnings every quarter, just because there's a good chunk of us that were here when the stock was reporting earnings when they were $7, and now it's at 123, and so it's a totally different experience right here, and it has become more than just a stock. It has really become an experience and a foundational framework for all of us to honestly become friends and meet each other in real life and all that stuff. So it's something that's really special, but also it's a business. And I think because it's a business, we have to analyze the numbers and understand the numbers in the context of what the market is expecting. Here's what I said last night on the Sunday Futures show about Palantir, and my thoughts really haven't changed overnight. I think they're going to deliver more than 40% growth. And why do I think that? When I looked at the numbers over the weekend, spent a good couple hours just really going through the last quarter's earnings deck, looking at the analyst expectations, and then looking at the deal flow that Palantir got over the past 3 months. If they did flat revenue from Q4 to Q1, they would have 31% growth. The analysts are expecting 36% growth, which is basically similar, 0% quarter-over-quarter growth in terms of the rate of growth from Q4, which would equivocate to $862 million of revenue. We know Palantir is going to beat that. We know they're going to beat earnings. There's no way they're going to miss earnings. I would bet a lot of money they're not. I guess I am betting a lot of money by holding my shares, right? That they're not going to miss earnings. So if they're going to beat earnings, the question is by how much? They need $30 million to beat and have a 40% quarter. And 40% psychologically, I don't know if that's going to pump the stock. I have no idea what's going to happen to the stock. But my assumption here is that when Palantir shows top line revenue growth of 40%, the street's going to look at that and be like, holy crap. And I'm not saying it's NVIDIA. I'm just saying that NVIDIA was deemed as overvalued and expensive for years and years and years. And then they finally grew into it. I know NVIDIA's a totally different company, totally different story. Their rate of growth is just insane. But I do think a similar archetype could be happening here where the company's expensive. I'll be the first person to say that. But then they put up the growth. And the margins we know are phenomenal. We don't need to go through the operating margins, free cash flow margins. If you kept up with the Palantir, those are going to be amazing. They're probably going to inflect and be even better given their headcount has been relatively flat. They're not hiring that many more people. They're just being more efficient. This whole concept of AI forward deployed engineers that Chad has been talking about. So then the question becomes, how much will they be? Will it be 40%? Will it be 42? Will it be 45? Will it be 48? What type of growth are we going to see? Are we going to get $1 billion quarter? Are we going to get 50% growth? I don't know. But I am confident, just based on my pure intuition and looking at the thesis of what has happened over the past 3 months, that it's going to be a big beat. And so as a result of that, I'm doing something very simple. I'm buying 100 shares. I already bought 50 of them at 123.85. So I bought those in the pre-market at basically 830, 825-ish. So I bought 50 shares already. I'm going to buy another 50 shares. I know it's a little bit of a shock to people because I haven't bought Palantir meaningfully since 25. I bought a little bit at 60, bought a little bit at 100, but I haven't really bought since basically call it early 2024. And the reason for that is because if Palantir falls 30% and it goes to 90, I just don't care. Right? Like I really, 100 shares at 124 is not going to make a big difference in my life. Number two, I'm starting to just believe Palantir when they say they're growing like crazy. I know the valuation is up there. I'm not saying the valuation is cheap, but at some point there is a qualitative metric to this story that is outweighing just the quantitative numbers. And maybe it doesn't today. Maybe they show 70% growth in the streets. Like, you know what? You guys are more expensive than Salesforce. We're just not going to give you any more premium. And so the stock tanks, and that could happen. But I think the business itself is performing at such a differentiated level, and the TAM is so gigantic. And I'm not just saying that the TAM is big to say that the TAM is big. The growth is proving how big the TAM is, not only on the commercial side, but realistically on the government side and the international government side, which we've seen with contracts from NATO. So I don't know what happens to the stock. I don't know if it goes up. I don't know if it goes down. My intuition is it pumps based off the idea, and we'll do the pump or dump poll right here. My intuition is it pumps off a 40% headline beat, and then Karp comes out and is Karp, and he's like, hey, wait a second. You guys thought we were a scam. We are the real deal. And as a result, I just want to have more shares. If it falls back to $90, $70, I'll sell some covered calls against those shares. Like, I'm not too worried about the bag holding of those shares. My position is not being established at 125. It has been established, well before that. But I think it's going to be a good quarter. I think it's going to be a good quarter. And I know the stock itself from the numbers doesn't make much sense, but the top line growth, I think, is going to be so expansive. And look, it could pump to like 140 or whatever. And then, 3 days later, it could go back to 100. Like, I think there's so many things that are possible here. I just personally think that they're going to beat. And I think they're definitely going to raise fiscal year 2025 guidance. And if they do that, if they guide for anywhere near 40% fiscal year 2025, that would be insane. Right now, they're guiding for 31%. I think they're going to get to like 33, 34. They're not going to fully guide for 40% right now. They're going to keep beating and raising over the next few quarters. But I think headline numbers are going to be pretty good tonight. So as a result, that is what I'm doing for Palantir. Thomas says valuation is risk, but other than the company going bust, valuation is the risk. I agree. Valuation is the only risk I see right now in the context of Palantir. That's it. And I've been saying, and you guys can believe me when I've been saying this since freaking $40, that, look, I think it's getting expensive. And unfortunately, if I stopped caring as much about the expensive nature of it when it was really going on its run in 2024, helped by S&P inclusion, NASDAQ inclusion, et cetera, other things that matter outside of just the valuation, I would have been buying more then. But I felt it was getting very expensive. And I still think it's very expensive. I just think now that it's in its inflection point of growth, like, I don't think Karp, who just did an interview a month ago, who said, I don't think in terms of win-lose, I think in terms of domination. When you have a CEO saying quotes like that, it's because he's ready to show the world that he's dominating. And I think the number is going to back up their type of domination, which I think is going to be just incredible commercial revenue growth on top of free cash flow margins that are expanding, operating margins that are expanding. And then that government is a call option to me. I mean, that was growing at 30% last quarter. I think that's going to get closer to 45%. And if they have any inkling of international governments are calling out to them for more demand, et cetera, which I think could be the new narrative outside of US commercial, because they need other stories to kind of elevate what the growth picture looks like, then I think the street's going to be very happy, along with the fact that they've been right about the LLMs being commoditized and the implementation of the LLMs being more important. I mean, when you have a company like AIG, one of the largest insurance companies, inviting Alex Karp to their investor day, talking about how Palantir software uniquely has helped their underwriting process become more efficient by 20%. Those are things we're just not seeing across the AI landscape. And I think as a result of that, the demand that Palantir is going to be seeing is going to be gigantic, and the street's going to reward them for that. So those are my thoughts. That's what we got on Palantir. I think it's going to be exciting. Matt Money will be joining me. Matt will be live at 3:30, so feel free to join whenever. Matt will be there. Unfortunately, Arnie will not be there, which made me very sad, but Arnie's traveling overseas, so he'll not be able to be there. And I think we'll definitely have Amir, and I'll try to get a bunch of other people, and hopefully Dom will be there, but we'll try to get a decent amount of the community out there as well. We got Sachin right here. It says, Amit, ONG, oil and gas majors who are clients pay Palantir more money than they give to companies like SLB and Hall, excluding field energy services, and in some cases 60 to 80% more, while incumbents are saturated. Palantir is not. Yeah, that's a hell of a point. So Palantir is a company that Sachin's been evaluating for a long time. If you've been part of the channel for a while, Sachin was on those first 70 episodes of Palantir Weekly, and he's worked in oil and gas for the past 20 years. When he says oil and gas companies pay Palantir more money than they give to companies like Schlumberger, I mean, it's one of those things that is very, very exciting in terms of just the scale of the opportunity that this company has. And then again, here's another element that we can't ignore. Retail's not selling. You know, like a lot of us just aren't really taking profits on this thing. And so the diamond handing from retail is creating an elevated momentum of pressure. I don't think it's the only reason Palantir is getting to this price. I really do think big money is coming in because I just don't think retail's hyping it up to these levels. But the fact that retail's not selling, I think, is something that can't be ignored. And given the lack of selling, given the momentum, given the just honestly, my thesis here is growth is going to be so expansive and beat estimates to such a degree that the market's going to be so impressed that they will continue to give it a premium. That is what I think justifies Palantir having a pretty good earnings. And so it's going to be fun. It's going to be exciting. And we're going to end up seeing what Palantir is able to do. Please do not follow me and buy 100 shares at this level because Palantir, the valuation is up there. It could fall easily. I could see it falling 20% after hours on really good numbers because the market's just like, it's just not as good as we wanted. I mean, you get humbled really quick in the markets and you can be super excited going into earnings in particular, which is literally 50-50. And then boom, stock doesn't do what you want it to do. So anything can happen. I'm purely buying it just off the idea that I think there's momentum built in terms of the growth rate that they're going to be able to put up. I mean, the fact that the analysts are only expecting 862 million, if Palantir comes to like 930, 940, 950, to come to $1 billion, I think that number is just going to be too much to ignore. And that's going to get a lot of people excited. So that's what I got in the context of Palantir. All right, cool. So we'll talk more about Palantir later throughout the show, but that is what we've got on deck for 3:30. Some other headlines we've got going on. First of all, Netflix is down 5%. And that's because of the Trump tariffs on foreign movies. I don't think this is going to affect Netflix that much in the long term, but we don't even know if this applies to the films or shows or what does it mean for foreign entertainment as a category. So I think it's just one of those ideas he put out there and the market's reacting to it from a narrative perspective, but I don't think necessarily, Netflix is going to be in a horrible position. But as of now, that is down 5%. Outside of Netflix, we got some news on Billy Ackman. So what has Bill Ackman done today? Well, Bill Ackman is officially turning Howard Hughes into essentially a diversified holding company. So Bill Ackman is going down, or at least I think beginning his Buffett route. And what is his Buffett route? Essentially what Buffett did, Warren Buffett is retiring, by the way, for those that missed the shareholder conference this weekend. Buffett has had a hell of a legacy. I think he's, one of the greatest investors of all time, 5.5 million % from 1964 to 2025. The S&P 500 returned 40,000%. So you got 5.5 million versus 40,000% in terms of compounding. It's just been incredible to see Buffett's career. But one of the things Buffett did for basically the past 30 years in order to really establish the ability for him to have a lot of flexibility and allocate capital as freely as he has is turn into an insurance company. As a result of being an insurance company, you're able to get so many premiums from the insurance. And if you're able to profitably manage the insurance and the unit economics of the insurance company, you're able to take those premiums and you're able to invest it. And as a result, if you're able to invest it, you have a lot of other opportunities where you can allocate capital to. Bill Ackman has been wanting to do this for a very long time. And the rumors have been there in terms of Howard Hughes and how he was going to transform it over a long time. But now he's officially doing it. And I think he's set up for another 30 years of essentially buying different insurance companies, maintaining those insurance companies and trying to run them profitably. And if he can effectively run them, well, you're probably going to see Bill Ackman take a lot of that money and spend it in whatever way he wants to be able to compound into different asset classes, basically using the Buffett playbook, maybe picking some assets that might perform better than Buffett has performed. Obviously, Apple has been the biggest one that Buffett got over the past 10 years. And that is going to be his route as well. So I think that's what we're going to see from Bill Ackman over the next couple of years. Here's what he had to say. Let me share this right here about what he's doing with Howard Hughes. Let's pull this up right here. Can I share this? There you go. Okay, never mind. It's being weird. That was so weird. Why is it? Okay, let me pull up something else from here. I was pulling it up on my second computer just to show it. I'll pull it up in a second. I had the clip on my other computer, but yeah, the point is he is sorry for the years. Sorry. But yeah, I tried to share it from. Oh, I know why it didn't work. I know why. Okay, I'm gonna pull it up in a different. I know why it didn't work. We'll pull it up in a second. But yeah, that's the route that Ackman's going. That's the route that Ackman is going. Good job, Amit. Thank you, Elliot. I appreciate it. Yes, it's called the float. It is called the float. Essentially, that is what he's trying to do here. Sorry. It's a good Monday morning wake up though, right? At least we're up there this morning. Here is let me pull this up on the background and let me pull up this clip right here that explains what and then we'll get into what he actually had to say.
Right now, Pershing Square announcing it has agreed to invest $900 million to acquire 9 million newly issued shares of Howard Hughes Holdings. We've talked about the potential for this transaction before. It is now happening on new terms. The purchase price is $100 per share. That's a 48% premium of the stock price as of Friday's close. And this brings Pershing Square's ownership stake from about 37% to about 47%. Bill Ackman, who has served as chairman of Howard Hughes' board up until last April, is named executive chairman of the board. And Ryan Israel, CIO of Pershing Square, will become CIO of Howard Hughes. The rest of the company's leadership team will remain the same. And importantly, this transaction is an effort for Bill Ackman to effectively get what might be described as permanent capital to try to create an operating business that then he can leverage off of. He's even described it at some points as the beginnings of a mini Berkshire, if you will. And later this morning at 8:30 a.m., we will be speaking with the man himself, Bill Ackman.
So I'll get that clip in a second, but essentially what Ackman said when I was listening to a little bit of what he was making the point of was, hey, we are very attracted to the insurance model. We are very attracted to collecting tens and tens of billions of dollars of premiums and then being able to allocate that capital however wish we may. And that is the route he's going down. So now that Buffett's retiring, I think we're going to see Ackman try to take up the mantle of being that guy who was able to do what Buffett did with insurance. The question is going to be if it's going to be successful. And eventually we're going to see how that plays out. We got some HIMS news right here. Apparently HIMS just appointed a new COO. This is someone who has been working for the past 20 years in Amazon, if I'm not wrong. Yeah, here we go. HIMS new COO worked at Amazon from 2005 to 2023. So they're doing this on the day of earnings. Nadir Kabani is now at HIMS. Ironically, everyone thinks that Amazon is going to be eating HIMS' lunch in terms of kind of taking over the subscription business that they've been able to build. This goes back to the argument that HIMS doesn't have a moat. So it looks like they got someone from Amazon to kind of help them be able to do all the things that people think that they're not going to be able to do. HIMS right here in the pre-market up 2.5. Up 2.5. You got NVIDIA 112.82. We have some news on NVIDIA. We'll get to that in a second. Microsoft right here, 431. SMCI is down about 1.8%. Pretty much everything down about 1 to 2% in the pre-markets. Reddit down about 0.3. Bitcoin 94,000. Bitcoin was at 93,000 over the weekend. AMD 98.64. AMD earnings tomorrow. That's a big one. Here are the earnings we have this week. Palantir and HIMS are going to be today. Tomorrow we have Datadog, Ferrari, Lemonade, DoorDash, AMD, SMCI, Arista, Tempest AI, Lucid, and Upstart. After that, we have Uber, Disney, Novo Nordisk, and Fiverr, Unity on Wednesday. We also then have ARM, IONQ, Carvana. Later in the week, we have Coinbase, SoundHound, Trade Desk, DraftKings, Cloudflare, Lyft, Affirm, Toast, Pinterest, Monster, CleanSpark, HubSpot, Shopify, Crocs, Peloton, Warner Brothers. So there's going to be a lot of companies this week that we're going to have to be looking at, and still going to be a jam-packed week for earnings. And then in about a month, we have NVIDIA about May 28th, I believe, right at the end of May. So that's going to be the big one that we are all going to be looking at. Okay, so in terms of NVIDIA, why is NVIDIA down right here in the pre-markets? One of the kind of core arguments that's still floating around on NVIDIA, and there's this rumor going on, I think this is fake, I don't think this is real, but there's an argument that NVIDIA is considering a Bitcoin allocation. I've tried looking for the source for this, and I can't really find the source outside of some crypto website that's like putting this out there. And now, you know, the business wires are running with it that NVIDIA is going to add Bitcoin. I don't really think they care that much about adding Bitcoin, but there's an argument there that it could be adding Bitcoin. So that could be one thing to look out for. But the core reason Bitcoin, or the core reason NVIDIA is feeling a little pain right here, is because they got a downgrade this morning. And that downgrade is not just the $100 price target that they got from Seaport Research, which is like an independent firm the other day, but it's from a different firm where you have a little bit more credibility saying, hey, we think there's going to be some issues, and that's Piper Sandler. So Piper Sandler says right here, we performed a sensitivity analysis on NVIDIA's data center revenues to assess potential impacts from a slowdown in capital expenditures over the next year. In our worst case scenario, assuming CapEx cuts across all NVIDIA data center end markets and no recovery in China, so that's the worst case, we estimate that approximately 6.45% of total data center revenue, or about $10 billion annually, could be at risk. And that right there is causing some downside pressure on the stock right now. It's important to note that our published estimates already excluded China revenues as we de-risked our model following the 8K filing on April 15th. The potential $9.8 billion in revenue impact equates to an estimated 40 cents hit to EPS. So if you thought they were doing about $4 or $4.50, you take that down to $4 or $3.50. Under this worst case scenario, using a 25x through multiple, we estimate a stock price of $76.25. In the best case, applying the same 25x multiple, our stock price estimate is $126.75. We reiterate our overweight. So if you're assuming that there will be a worst case scenario, which is that China doesn't recover and that CapEx doesn't increase, or that CapEx might necessarily get cut in 2026, you put a 25x multiple on whatever PE that gets to, and you get to around 130 on NVIDIA, which is still some decent upside from here, but it's not the 180, 190 levels that some of the biggest bulls have on the street. Again, it's a question of, do you believe that CapEx is slowing down? Do you believe the AI infrastructure build out is slowing down? And if you do, then yeah, you probably don't get that excited about NVIDIA. One thing I think is really interesting is that NVIDIA's covered call premiums, again, are amazing. So if you think the upside is 130, even if you're buying it at 112 to sell covered calls against it and benefit off the volatility, that is a way to still be able to make money off this name while being in a relatively safe company that, hopefully it does not collapse 50, 60% because the AI revolution is real. And so that's one of the reasons I think NVIDIA is getting hit a little bit in the pre-markets. Again, the Bitcoin rumor, I don't think that's real. I really don't. I tried to look for the sources on that and I couldn't find any meaningful sources. I think it's just some blogger that went viral by saying NVIDIA should buy Bitcoin. So I don't think that's happening. But if it does, it would be interesting to explore. I don't think NVIDIA needs to buy back. I'd rather have them buy back their own stock, to be honest, versus Bitcoin. I'm not opposed to them buying Bitcoin. I just don't think they're going to do that. The dollar right here at 99.49. So you got the dollar that's down a little bit. Let's check the 10-year. The 10-year was spiking on Friday. It's spiking again right here. It's okay for it to be spiking because stocks are going up. So that's not the worst thing in the world. But you do have the 10-year that's showing a little bit more volatility to the upside in terms of people selling that and getting ready for equity exposure instead. We do have some breaking news. Skechers just got acquired. Wow. Skechers, huh? Skechers shares are up 25%. Look at that green candle right there. There you go. Skechers is getting acquired by 3G Capital. I believe that's a private equity firm. Private equity firm. They're paying $63 a share. That's a 30% premium to the company's current valuation before this was announced. 3G Capital said, with a proven track record, Skechers is entering into its next chapter in partnership with a global investment firm. Given their remarkable history of facilitating the success of some of the most iconic global consumer businesses, we believe this partnership will support our talented team as they execute their expertise to meet the needs of our consumers and customers while enabling the company's long-term growth. Does anyone wear Skechers? Does anyone wear Skechers? I don't think I've wore Skechers in so long, but there you go. 25% on Skechers. I wonder if there was some call option volume on Friday. That was a bit unusual. We'll kind of find out if people were getting into this one. Palantir 124.37. That one goes green again. And then Tesla right here, 284. That's down about 1%. Wow, a lot of you guys saying you wear Skechers. I don't think I've worn Skechers in so long. That's incredible. There's been a lot of new brands like New Balance, all these different brands, Crocs, etc., that have popped up over the past couple of years as well. All right, Skechers. I don't know it was that big of a brand. Apparently, a lot of people wear it. There you go, up 20% right here, 25%. I don't even know if majority of their supply chain is in China or Vietnam, but that's a hell of an acquisition, especially right before the tariffs, because I would imagine they don't make their shoes in America. So maybe Skechers saw the tariff volatility and they were like, you know what? We'd rather just get out of here and get taken out. And that's what we're seeing right now, up about 21%. Let's get an update from the professor and see some of the stuff in the context of tariffs. And then we will go from there. We got the market open in about 8 minutes.
Of where they were before the president's announcement in early April of all of these additional tariffs that would be brought on. How are you feeling about the markets today?
Well, Becky, first let me say a few words about Warren Buffett. The last 10 years, Berkshire Hathaway's return has been almost 2% above the S&P 500. And for a value-oriented investor to be above the S&P 500 over the last 10 years, which have been one of, if not the most difficult decade for value investors in the 100 years, is absolutely extraordinary. I mean, I don't think any value investor can touch him. You reported many times, he said, if I can match the S&P 500, once he reached a certain size, I think I'm doing pretty well. And not only did he match it, but he surpassed it. And that's extraordinary. I think we should also, listen to what he said about tariffs. And when, we teach a theory of comparative advantage. You do what you do best. You trade with the rest of the world. It's somewhat interesting. I know you know, Becky, but Warren went to Wharton, but dropped out after 2 years. But he seemed to learn and he went back to Omaha and finished his education at University of Nebraska. But I think he learned about what, the theory of trade and how it can actually enhance the welfare. And I think those principles are important. Donald Trump went 4 years to Wharton, didn't seem to learn that principle. I wish he did. So, I am worried. I was hoping trade deals would be announced by now. They're not. I don't think the impact has hit us yet. I mean, no one has yet got that higher prices or, hey, that good is not available anymore. So even though, there has been a lot of worry, until we actually see it come, I think that will have a more severe economic effect in the future. I'm not as optimistic as Tom. I love Tom Lee. I think he's one of the greatest strategists. But I think unless we see an unwinding of these trade tariffs much faster, I still see some turbulent times ahead. On the Fed, listen.
Professor, can I just jump in on that point, because I do think that's an interesting one. We have not seen the trade deals yet. There have been reports that we could see the framework for several of these trade deals very soon. But I will tell you, just in reporting this weekend and talking to a lot of the managers of Berkshire businesses that were here, probably 20 or 25 of those managers, you start to compile an interesting perspective of what these tariffs mean for the businesses directly. And it's not something that Buffett's necessarily talking about on stage with some of these issues. But I'll tell you, I spoke with the CEO of Oriental Trading, and that's a business where they're not getting new stuff that's shipped in. And the CEO will warn you that, you might not see Halloween this year because you're not going to be able to get the costumes or any of the goods that would be coming if this isn't worked out in the next couple of weeks.
So I think a lot of those issues are very relevant here. Here's my take in terms of what's going on with the tariff situation. All we need is the taking down of the extremities of the tariffs to be able to have, I think, what Tom Lee thinks, which this morning he believes we can get back to all-time highs. The professor's making a good point right there, and so is Becky, in the context of, hey, a lot of these CEOs are getting scared that if this continues to last, forget all-time highs, we're going to have some actual fundamental structural problems in the economy. Trump, I think, can easily get rid of all these issues, get rid of all these concerns. There's still going to be damage in Q2 because that's inevitable. But for Q3, Q4, which is the market's going to be basing its forward multiples on, we could have all-time highs again. I think Tom Lee's not wrong about that. The problem is companies are proving to be resilient, but so far companies have proved it without actually experiencing a tariff quarter. And so when Tom talks about, hey, the ECB has been cutting rates because they exclude shelter, so that means the Fed should be cutting, oil is coming down, Bitcoin is showing that the market's resilient. All of those things are true. However, I don't think anyone in their right mind can imagine us getting back to all-time highs or even anywhere close to 6,000 if we don't, to an extent, get some of these deals on the table. And more importantly, in my opinion, get the tariff rate from 10% back down to 0% universally, or at least close to 0%. Now, Trump, in a Air Force One interview yesterday, said that he has no desire to reduce the tariffs. He said on Meet the Press the other day as well, which was on Sunday, that he also does not want to get rid of tariffs on China. He did say he will definitely be lowering tariffs on China. He explicitly said that I have to be able to lower tariffs on China in order to do business. So it's not like he's not admitting that we're not going to have to take tariffs, but or take the tariff rates down. But if the tariff rate goes from 145% to freaking, I don't know, 25%, 35%, 45%, that's still an aggressive rate. And so I am pretty excited about this market in terms of the momentum that it has and the fact that we've recovered all the April lows, and that I don't really think it's necessarily a bear market rally. I think there's legs for this macro to stand on. But I also think if we don't get any deals in the next couple of weeks, the market's going to start losing a lot of excitement, and they're just going to lose faith, which is fair. I don't think it's unfair for the market to be skeptical about this if we don't get deals. So I hope we get it. And if we don't, then I think we're going to have to deal with some volatility. But I am rather confident that at this point, I don't think Trump wants to risk a literal recession and blame everything on Biden. If he wants to take some credit for some things that we got going on, then we need to get some deals done. Real quick, we got about 40 seconds until the market opens. Grab and GoTo. We've been following the story for a long time. GoTo announced today that 4 key board members have resigned. All resignees will remain in position until the registrations are accepted by shareholders at the company's upcoming annual general meeting. My response was this meme. It is just oddly peculiar that 4 board members of a public company that is in rumors to be acquired are stepping down. That's all I'm going to say. That's all I'm going to say. So I know Grab has not been moving yet. It's kind of been stuck in this 450 to 470 range. I think we're going to get something, but we got to get this deal done. And from what it looks like, there's a shot, at least in my opinion, for this deal to get done. All right, here we go. Monday, May 5th, 9:30 a.m. Thank you, everybody, for being here. The stock market, once again, is open. Wake your ass up. Let's get into it. Happy Palantir earnings day. Here we go. Palantir opens up 123.99, down about 0.24% on the day. Opens up basically at 124, relatively flat from where it was last night. Again, last night we got to 126.40 in the overnight markets, which was an all-time high. Meta at 591.86. Meta's down about 1%. Tessie is down 1.2%. Robinhood down about 2%. Nvidia 113.38. It was down about 2%. Now it's down 1%. Microsoft is down 0.21. Grab is down about 1.74. Roblox down 2.2%. Had a great earnings last week. SMCI, they've got earnings coming up tomorrow, down 1.3%. They did have preliminary Q2 guidance. Wasn't the best. Stock already fell 15%, so I think the worst of it is priced in, hopefully. Reddit, 112.94. That's down about 0.78. It pumped to 140, came all the way back down after good earnings, even though on the call they said some of their guidance is not the best, but overall earnings were not the worst. Archer is down about 2%. GameStop's down 0.5%. XYZ, which was down 20% last week, is down another 2% on the day. So you got pretty much everything that's red. Bitcoin's up a little bit. Verizon's up a little bit. AMD is up about 0.5%. Netflix was hit 5% down in the pre-markets because of the Trump foreign movie tariffs. That one's recovering just a little bit. You got a little bit of a green candle right there, down about 3.7 instead of down 5% on the day. But most things are relatively red except, Palantir tried to go green. Now it's red again, 123.18. It was just holding on to its green. You got a lot of movement back and forth on Palantir. Let's look at the semis. Semis are all red, all of them, except AMD. AMD, wow, going the opposite of all the semis. Okay, AMD going the opposite. What about HIMS? HIMS is up 1%. HIMS also has earnings today, so that's going to be an important one. In terms of crypto, all of these are pretty much red as well. Coinbase, MicroStrategy did buy another 1,855 Bitcoin. MicroStrategy right here at 384. That's down about 2.3%. Bitcoin 94,000. Coinbase is down. Robinhood is down. Robinhood down about 2.7%. All the semis are down except AMD. All the cryptos are down. Mag 7s are all red. Nvidia, Google, Meta, Microsoft, Tesla, Amazon, and Apple. Wow. Apple getting another 1%. Apple was the only stock down 4% on Friday. Friday was a blistering green day. Amazon right here down about 1.2%. And even though Warren Buffett gave Tim Cook a lot of credit at the Berkshire meeting on Saturday, Seems like the market is still pretty upset about what we've got going on in the context of Apple. Where is SoFi? SoFi right here is green. SoFi up 0.2%. SoFi, a bit of a green candle right there. That goes green. Amazon still red. Meta 589. Palantir 122.27. Palantir down about 1.5% as we get into it. Wow, AMD going the opposite. I guess AMD is pumping before earnings. AMD usually follows all the semis. Look at that, up 1.2%, basically at $100 right here on AMD. What did you guys say on Palantir pump or dump? Let's see. We've got 64% say pump, 36% say dump. All right, 60-40. 60-40 in terms of some excitement. Robinhood is down 4%. Robinhood going down. Robinhood going down with the broader market. Bitcoin also showing some weakness right here, hurting Robinhood. Dell is down about 0.17. Again, Archer down 2.5, and then Microsoft down 0.17. Tessie, there's not been any major news over Tesla other than they're offering 0% APR on the Model 3. Tesla down almost 3% right here, and 1.9% APR on the Model Y, the new one. So they are giving out some discounts. We have about a month left until June. June's when they're doing the Robotaxi event, so that's supposed to be very important. On top of that, in June, we're supposed to get the announcement of the production of the new affordable version of either the Model 3 or Model Y. They said first half 2025. June would conclude the first half. So I would imagine in about a month and a half, we should get more information from what's happening with Tesla. PayPal right here, 67.23. SoFi going red, down about 0.2. Again, Palantir 122.60. That's down about 1.3%. And then NVIDIA 113.78 right now. Tesla sales down 36% in Spain. I did see that headline this morning. Yep. I mean, the Europe issues in regards to Tesla continues to be a problem. And it wasn't just Europe. It was California. We saw 2 weeks ago, their California registrations were down about 15% year over year. So there you go. Tesla new Spain vehicle registrations fall 16% year over year in January, while electric vehicles fall as a whole rise 54% in April. So you have the EV sector growing in Spain, Tesla falling. Again, I would attribute that probably to some brand damage. Maybe there's some supply chain issues there, but there might just be some people across the pond that are not that fond of Tesla's brand. NVIDIA right here going a bit green, trying to get for 114. Seeing a little bit of a reversal right there. Grab as well was down 2%. Now it's barely down 0.5%. And then Palantir 122.50. Palantir continues to get hit. Google, what's going on with Google? Let's see right here. Google. Oh, wow. Google's green as well. Interesting. So Hood's down, Palantir's down, SoFi's down, Amazon's down, Google's up a little bit. Meta is down, but Meta's up like 7% from last week. So Meta did well. And then Microsoft holding 435, and this thing was stuck at 380, pumped really nicely off 35% Azure growth. Microsoft right here holding on to that momentum. And then Bitcoin, which is basically flat, 94,250 here right now. What else do we see? News on TTD, they had a pop. I didn't see any news this morning. I think they have earnings on Thursday. These guys are up 2.4%. This one is down like 70% this year. This one has been just wrecked. So I would be curious to see what they can say on earnings to potentially change that narrative. Robinhood right here below 46, down about 5.5% right there. Palantir 122.27. Some of that momentum dying out from the 126 pump we saw yesterday. I actually like that though. I would way much rather have Palantir at like 115 before earnings, which I don't know if it's going to get that low, versus like 130 before earnings. So Palantir dumping before earnings actually would be a way better setup in my opinion, at least on a day like this, given the valuation already is pretty aggressive, versus, you know, being up at 130-ish. CEP, so Jack Mallers' Bitcoin holding company, that one down 17% on the day. Looks like some people woke up and they said, we are not going to be paying a 5x premium against the underlying holdings on this one, at least right now. So Bitcoin right here, or CP, down about 17%. What else are we seeing right here? CEP's down. Netflix again down about 3% right here. There's another name. Oh yeah, AMD. This one continuing its momentum. Weird, right? You're getting a lot of names go the opposite direction from where they usually follow, especially in their sector. AMD right here, up about 3%. Grab is up, SoFi is up, AMD is up, Reddit is down, and you got Palantir that's down here as well. Why is HOOD down 5%? I don't really know. That one's a bit more weird. Where's the S&P? I guess you could chalk it up to the S&P. Yeah, kind of. S&P is down 0.5%. Again, HOOD is high beta. Market thinks that we have any little bit of weakness, which is the sort of the part that I think everyone has to remember. As excited and euphoric as we are that we erased those April lows, we need a deal to solidify all this stuff. And the people that I guess are positioning themselves in a way to think that we're not getting a deal are the hedgies. The hedgies have gone short at the highest level since 2022. So either retail's going to be right on buying the dip in March and April, and we're going to be going forward with this. Really, it is in Trump's hands at this point and Lutnick's hands to be able to give us a deal that has any level of momentum that can change the narrative here. If we don't get a deal anytime soon, I think in the short term, the hedge funds might be right, because I just don't know how markets continue to pump if there's this much uncertainty. NVIDIA right here, 114. We need a deal. And we need a decent chunk of those deals. So hopefully we will see them rather soon. Okay, Berkshire is down right here, 6%. So the reason Berkshire is down is pretty obvious in my opinion. I mean, Buffett's stepping down, right? So although everyone's very excited for Buffett and his legacy, yada, yada, Greg Abel is going to be the guy who replaces him. A lot of people don't know if Greg Abel's the guy who can do this. A lot of people don't know if Greg Abel is the guy who can lead Berkshire to the promised land, as Buffett has been doing over the past 50 years. I talked to Steve over the weekend, and he said that Greg comes from an energy background, and the business in terms of the holding company for Berkshire has been transitioning realistically to focusing on energy. That's why they own, I don't even know how much of Oxy, but it's more likely than not that they're going to take Oxy private. So I don't think Greg's going to be a bad CEO. I don't know enough about the guy, but I can understand the street just saying, you know what, if Buffett's not going to be here, then we're going to get out of here right now. Yes, I'm using Robinhood Legend. This is the app I'm using, Robinhood Legend. I used to use Webull, but they added some features that I care about. So now we are using Legend. Berkshire, though, down 6.2%, dude. That is pretty aggressive. That's, I think, a couple $100 billion in market cap that Berkshire is losing right here. Tesla right here, 280. And then you got Bill Ackman, who's trying to be the next Berkshire Hathaway by doing what he's doing in regards to the holding company with Howard Hughes that we'll get some more details on in a second. So you have a lot of different forces competing for what used to be Berkshire Hathaway. Doug says, Greg running Berkshire gives me 1990s, 2000s GE vibe. Well, you know, the interesting thing about Berkshire Hathaway is they've been able to succeed primarily because of Apple, right? Apple down another 2%. That's getting ugly. Apple now down 7% from last week. But and I don't think it's disrespectful to say, hey, one of the reasons that Berkshire has realistically outperformed over the past decade against the S&P is because they invested a couple $100 billion into Apple in 2016. Without Apple, I don't think Visa, American Express, Kraft Heinz, Coca-Cola, Geico, I don't think those companies do it for you. It was Apple. So, I mean, I wonder if Greg Abel is able to find a tech company that is fitting the requirements, Palantir right here, down 2%, of what an Apple looked like, which Berkshire never thought of Apple as a tech company. They thought of it as a consumer company, a consumer hardware company. It just happened to have a lot of technology associated with it. I wonder if they find a company like that again, because I don't know if realistically over the next 20 years, there can be a company that delivers outstanding returns, or forget outstanding, returns that are even better than the S&P if it's not rooted in technology. I mean, do we think that's possible? Do we think that is possible? That's a good poll question. Reddit right here, up about 2%. Do we think a company over the next decade can actually beat the S&P that's not a tech company? Can a company beat the S&P over 10 years that isn't tech? And I'm sure the answer is yes. Like, there's companies that will beat the S&P that aren't tech companies. But when I mean beat, I mean like meaningfully, you know, your money was better inside of an NVIDIA, for example, or a Tesla than whatever other company that is not a tech company, but also beat the S&P. I think it's gonna be hard in this AI tech revolution that we're having, where productivity and margins and free cash flows and your ability to buy back shares, which what is the reason Apple can buy back shares? They've got money. And they've got money because they have great margins because they're a tech company, right? So a lot of how they reward shareholders has been through a tech-oriented balance sheet. Palantir, 121.50 right here. And I think we're going to need more tech companies to continue to do it. Skechers is, again, going private. That is why their stock is up 25%. They're getting bought out at 63 a share. So Skechers right here is going private. Costco. Okay, so Costco will probably beat the S&P. I don't know if Costco is going to deliver astronomical returns, but if there was one stock I could bet on, that's not a tech company. It's probably Costco. So that's fair. That's very fair. Again, and when I mean beat the index, I mean like really beat it. Not just like the S&P is up 10% this year and some other random stocks up 12%. Like we're talking about really smash the returns, because that's what Apple did for Berkshire to give outsized returns over the last decade to their shareholders. They needed Apple to absolutely demolish the S&P 500 in terms of returns, which it has. And if it didn't do that, I mean, Berkshire would not be ending out the legacy in terms of the Buffett era with the returns that they've been able to give to shareholders. I just don't know if a company could do that if it's not a tech company. Okay, cool. So I already bought 50 shares on Palantir. I'm buying my next 50 shares. That's going to be my 100 shares for the day going into earnings. Let's see if it pops up on Legend right here. So I'm buying it right here, 50. Okay, you should see the notification. There you go, right there. 50 shares of Palantir, 122.22. 122.22. All right, so we bought 100 shares today. We bought 50 at 23 or 123.85. Then we bought 50 at 122.22 just now. For those that want to get my Palantir preview, just rewind to like the first 20 minutes of the show. I talk about why I'm buying Palantir today and my earnings expectations. But the TLDR is I think we will get 40% growth. And that 40% growth, I think, is going to be a number that is very, very exciting for the markets to see. Chad in the chat. Thanks, bud. You're welcome, Chad. You're welcome. Shout out to Chad being here. Shout out to Chad. Yeah, look, I think it'll be a good quarter. I think it'll be a good freaking quarter. I think it'll be good. And worst case scenario, you know, you can sell calls against these shares. The premiums are juiced up. Like, I'm just not that worried about buying right here. Now, granted, look, I think earnings can be really good, but I also think the stock can tank because the valuation's up there. But I think if they deliver top line growth of more than 40%, I think the stock is going to have some momentum based into it. And I like that it's going down before earnings. Like, I really like that. Every time Palantir is pumped on earnings, it went down. The one time Palantir didn't pump on earnings in like the past 2 years was ironically Q1 of 2024, when it went from 20 to 25. We had earnings and then it fell back to 20. Every other time it dumps at least 5% going into quarters, going into the earnings, and then it, you know, has a good quarter to get it some momentum. Okay, PMI. Let's look at PMI. We got PMI. Is it good? Is it bad? What do we got? PMI is it's loading right here. 51.2 is the expectation. Services, we got services is 50.8 versus 51.4. That is lower than expected. And global composite, 50.6 versus 51.2. All right, that's lower than expected. That's lower than expected. So that's actually a little bearish. Palantir back above 122. S&P, yeah, it went down from 0.65 to 0.8. I don't know if the market cares that much about the PMI data, but it is consistent with the last week ISM services data, which is that we are not contracting because we're not below 50, but we are expanding at a slower growth rate than where we were at least 2 quarters ago, because we were healthily above expectations at that 50 range. We were at like 55, I think, in Q2 of 2024. So yeah, a little bit of contraction right there. NVIDIA at 114.26, but not as aggressive of a contraction as I thought the market was expecting. SMCI right here down about 2.24%. Grab going green, Grab's up 1%. Microsoft 436, and then Meta 594 here right now. AMD and Uber. AMD is up, continuing to be up. AMD right here 2.28%, and then Uber right here is up 1% as well. Again, in terms of a services PMI, we're waiting on that in 13 minutes. So we get services PMI at 10 a.m. We already got global and manufacturing. And so now we are waiting for services to give us a better understanding of the market as well. Do I own Walmart? No, I do not own Walmart. Hims is down. Hims goes down. Hims right here getting a little bit of a hit. Airbnb, they had earnings last week as well. Airbnb, that's up 0.33%. And then Amazon. Wow, Amazon, dude, down 2% as well. Amazon and Apple just couldn't get any love by the market. Amazon, wow, down 2, and then Apple down 2.4. Holy crap. I think Apple's falling because Berkshire's falling, right? You might have some people just selling out of both right here. Again, Apple said they're going to take $1 billion hit to their revenues in Q2, which is not going to be the best for Apple, obviously. So that's getting it hit. Along with the fact that, they said tariffs are going to be an issue for them and they're going to have to watch out for when this trade war ends. There is a lot of Apple inventory that's going into Vietnam and India. We're seeing a lot of dumping of their supplies in different markets, trying to get away from some of the tariffs that are being imposed on China. But you do have Apple right here taking a 2% hit on the day. It's only 2%. Don't wow. Well, remember, Apple doesn't fall 2%. Like Apple's not one of those names and also Apple's down now 7% from last week. So with Apple, it's more so a continuation of some of the pain. Tesla right here down 2.3. Palantir 122.45. Grab 495. We've been waiting for that $5 range on Grab. There's a lot of resistance there, but hopefully we can find a way to get there. And then you got Intel right here at 2042 and then AMD at 197. Let's listen to Berkshire, or rather Bill Ackman, on becoming the next Berkshire. Again, made a big move today with Howard Hughes, and let's see kind of the logic behind why he
happened is it's become a crowded market, meaning there's a lot of private equity players that are trying to, I imagine, a lot of the stuff that you may want to buy. By the way, they're buying up a lot of the stuff that Warren Buffett used to buy.
Sure.
So what's going to give you an edge in this case?
Sure. So one, we like great businesses, and so do private equity firms. But the big competitor, maybe by example. So I met with Glenn Youngkin, formerly co-CEO of Carlyle, now governor of Virginia, and he was saying, "Oh, I really love what you're doing with this Howard Hughes thing." This is when, again, it was publicly announced, but obviously we had not gotten to the deal done. He says, the biggest problem I had in private equity is I'd have to sit down with Mr. Smith and tell him, you realize, of course, that after we buy your business, you're going to kind of be on the merry-go-round, and every 5 or 7 years, your company that you built is going to get sold to someone else. And I had to be candid with them about this, but that's the nature of private equity. And what Buffett was able to achieve over time is he could sit down with Mr. Smith, who was, maybe 70 years old. He built this incredible business, an important business in the community. And he can say to him, look, I'm going to buy your business. I'm going to take very good care of it. I'm going to own it for decades. Your employees will be proud. And Mr. Smith found that a very appealing notion after he spent his entire life building a business. Now, the issue for Berkshire today is at $1 trillion scale, buying even a billion, 5 billion, even $10 billion business doesn't move the needle. Whereas for us, of course, we're starting out at, the market cap today, is about 3.5 billion or something. So we have the benefit of starting small, but we have the similar benefits of being able to be a permanent owner of a company, which is something that, depending on where we have to get our stock price to closer to intrinsic value. We can also offer a tax-free execution. We can give someone the ability to kind of sell some of their business for cash, sell them for stock, and go along for the ride with us.
Becky's back in Omaha, where you just came from. She's got a question for you, Bex.
Please.
Hey, Bill, great to see you. Thanks for coming on with us this morning. I'm so intrigued by what you just said about how you guys would either build or buy an insurance company, that the benefit of the float hasn't gone unnoticed by you. First of all, do you think it'd be easier to buy one or to build one? I don't know where you think prices are and valuations are on these things right now. And second of all, over the weekend, something Ajit Jain kind of focused in on and talked about on stage was the idea that all these private equity companies have now gotten into the insurance business, and he thinks are writing premiums that aren't at great prices and that don't make it very profitable long term to do some of that business. He basically said, almost in these exact words, that Berkshire's waving the white flag when it comes to some of that, particularly when it comes to life insurance, I believe, that they can't write that insurance at competitive levels because he doesn't think the pricing is right from private equity.
Sure. So what Ajit was referring to is that the Apollos of the world, Brookfield and others, have issued annuities, which are more financial products than they are insurance products, but they're They occur in the context of a regulated insurance company, and they take that capital with multiple of that capital, and they lend it with their sort of proprietary access to private debt type deals, and they make a spread. And that business is, I would say, getting more crowded over time. But to answer your question directly, I think it's more likely that we will build an insurance company. In fact, we have a person that is a phenomenal executive in the industry that we're just beginning a conversation with that's intrigued by what we're doing. And I like the idea of building from scratch because you don't assume a bunch of other people's kind of liabilities. I think he's a super talented executive, and hopefully we can make a deal with him. But that would be, I'm kind of more intrigued with the idea of building something from a blank sheet of paper.
So there you go. You got Bill Ackman basically acknowledging, hey, I'm going to build my own insurance company from the bottom up, just like Buffett did so many years ago. We're going to get a ton of premiums from the insurance that we sell, and we're going to use that money to buy up a bunch of equities. I mean, it really does seem like Ackman, he's been hinting at this path of going down the Buffett route for such a long time. And it makes sense that he kind of waited for Buffett to retire, and now he's starting to take it more seriously. I mean, he didn't even wait a couple of days. As soon as Buffett announces he's gone, boom, Ackman's here, and he is getting ready to turn Howard Hughes into one could argue, biggest holding companies outside of Berkshire Hathaway. So I think it's going to be a big journey over the next 2 decades to see kind of how he plays it. Obviously, his big bets have been Chipotle and CPKC, and he's had a bunch of wins, Hilton hotels, all that stuff. But now it looks like he's going a different route, and he just wants to buy businesses and operate them internally without necessarily only having to worry about the public markets. Apple right here, 2.6%. It is 3 cents away from going below 200. Apple, again, getting hit. All the airlines are up today, I think, because of oil prices. United up 2.73. Southwest up 1.47. Delta. This is probably the reason they were pumping on Friday. I was wondering, why are these guys up? And it's likely because the market felt that OPEC was getting ready to pump more oil, which would decrease prices as they would increase supply. 45.60 on Delta. And as a result, you got the airlines that are getting a bit more of a pump. American Airlines as well, up about 2%. So all the airlines are getting some momentum. Grab has about 370,000 shares at $5. The big news on Grab today, which isn't really Grab-related news, but GoTo, the company that I think they're trying to acquire, 4 of their board of directors are stepping down. And I mean, I don't know. I'm not an expert on merger and acquisitions, but I kind of feel like if 4 board members, not 1, not 2, but 4 of them are stepping down, maybe it's because the company is not going to be around anymore in the same capacity. So maybe that's creating some momentum on Grab, but got a lot of resistance at $5 to break through to see if we can get some momentum. Oh, real quick, I didn't get to play this for you guys last night because Steve was making fun of me for not watching The Godfather. But this is what the CFO said when he was asked about it in an interview after earnings.
Question again, but we're seeing more reports again over the last 2 months since we last spoke about possible merger between Grab and your rival in Indonesia. Some analyst reports also coming out assuming that a Grab GoTo merger is pretty much a done deal, but we know that's not a done deal unless we get actual confirmation for either you or the other party. So again, forgive me for sounding like a broken record, Peter, but are Grab and GoTo in talks? Are you guys dating?
I won't comment on those ongoing speculation or rumors, JP. But what I can say is Indonesia continues to be a very important country for us. If you look at the growth actually of our Indonesia market from Q4 to Q1, we have more users on our platform than before. We actually continue to increase our margin also in the Indonesia business, and it's continued to be a very profitable country for us. So we're going to continue to double down. We really think Indonesia is underpenetrated actually for us, and we're going to continue to.
Again, I mean, I won't comment on those ongoing negotiations. Like the way he said it, bro. I don't know if it's his accent or just there's a lot of rumors out there from really good sources that they're having conversations. The CFO smiling when he says that I won't comment on this stuff. I mean, look, maybe it happens, maybe it doesn't. But if it does happen, it is going to change the landscape of Southeast Asia. That is for sure. It'll be a big move. We got 1 cent to get over $5 here. 300,000 shares are in the way of breaking through 5. If we break through 5, I think we can continue going further. But we got to see. We got to see if we can break through. S&P got a green candle. Where's the S&P? Oh, yeah, there you go. It was down almost 1% on that PMI data. We get services in 3 minutes. Now it is down 0.62%. NVIDIA also getting back to 114. Palantir, 123.92. Wow, Palantir. It's freaking 121 2 minutes ago. That one's going to be volatile all day. And then we'll get numbers. NVIDIA again, 114, and then grab 498 here right now. 3:30 Eastern is when I'll start coverage for Palantir earnings. And then 4 p.m. we will officially get the results, but I'll be live at 3:30. And we'll see what we do. Also, put in the chat how you're playing Palantir earnings. Are you selling covered calls? Are you selling some shares? Are you de-risking? Are you YOLOing call options? Like, very curious. You guys know I bought 100 shares. That's kind of my play. Nothing else too crazy, but very curious to see what other people are doing. Let's get one of our favorite analysts onto the show that is embracing his Avril Lavigne emo girl era.
I just didn't comb my hair. All right, whatever.
Dude, brother, I like it. It's legit.
It's okay.
You need to paint your nails black, start a goth band, you know? I like it.
Yeah, I'm all right. I am starting to get a little bit worried on credit markets. If you have you been reading the news this weekend on some of the things that have been happening with private credit, private equity?
I have not. Please educate us.
Yeah. Okay. So this was actually referenced during the Berkshire meeting, and I was like, oh, that's interesting. Like even Buffett is starting to get kind of worried about this whole thing. So a couple of things are happening. Well, number one, Bill Ackman getting into Howard Hughes is a very interesting proposition. I think he really is trying to lean into like the next phase of his career and trying to be the next Buffett. So he's trying to structure his funds around this permanent capital model.
How ironic is it that he announced it? How ironic is it that he announced it a day after Buffett retired as well?
Yeah, I think there's a bigger problem that's happening though, and there's a couple of things. Like, let's watch this one video from that I sent you on StreamYard. Look at that with the manager from Oaktree.
Yeah, let me pull it up right
here. Private markets, in public markets, you saw the white. In private markets, you gave me an amazing statistic that you're seeing some funds being sold 90 cents on the dollar, as little as 70 cents on the dollar. And you told me that this is before the tariff negotiations started.
That's correct. In fact, I probably misquoted the low end. I think it's even lower than that in some cases. We've seen and done trades at, in the 50-cent range. So what I would say is this. If you look at all the major asset classes that we focus on, we're primarily sub-investment grade. It's high yield leverage loans. It's private credit. And triple Bs. We occasionally look at triple Bs as well.
By the way, ISM, we beat 51.6 versus 50.2. So that is at least bullish for right now.
Well, high yield is about 385 basis points over right now. It got as low as 260. It's got as high as 460. So it's right in the middle of its range. Loans is wider of that. Those would imply we're at a very normal state in the credit markets, which I find ironic because this is anything but normal. These are unprecedented economic times. So as you look, I think it is starting to create some desire on the part of large institutional credit holders to get out of this before maybe there's something, before a fall. And that's where you're getting the credit secondaries. They've been pushing their GPs to get liquidity out of the funds. The GPs haven't done it at the pace that they would like. And now the LPs are taking matters into their own hands and putting credit secondaries out there for folks like us.
All right. Explain what that means, Kris. You're muted.
Imagine right now you're like a big pension fund, sovereign wealth fund, right? And you're trying to invest and basically grow money so that you can over time generate a return that you can utilize for general purposes to support, like, let's say an organization. Like, let's say you're an endowment that has let's say $1 billion, and you need a certain amount of money to run your day-to-day operations, but you also have this large pot of money that was given to you a long time ago that you basically run your operations from. So let's say you have that $1 billion, it generates a 10% income, so you get 100 million a year. Use that $100 million to keep your organization running. And there's a lot of organizations like that, like pensions with firefighters and police and state state pension funds. All these things are usually giant funds. So they give their money to private equity. Private equity, what they do is they go out there and buy businesses on the private side, on private markets, right? So let's say you have a business that's not public, that's a private business. You buy it, and basically you generate value from that business. And over time, that business generates profits. You take that profit and you hand it to your LPs so that they can do whatever they need to. Now, the thing is that distribution that they get is usually comes from those investments that those PE firms make. The thing is, how do the PE firms make money on a private equity deal, right? Like if the value of that private equity deal is not generating a lot of money, like how does it happen? So usually what happens is you have liquidity events, right? Like whenever you signed up for Figure, you put $25,000 with Figure, and on paper it's like, oh my God, look, I'm rich because I have $250,000. It went up 10x. But unless you have a willing buyer on the other side, it's just paper.
It's nothing.
It's nothing, right?
Yeah.
So one of the things is because of how the markets have been, a lot of private equity hasn't brought a lot of things to the IPO market, right? And the thing is, the cost of capital is actually kind of high right now.
By the way, real quick, Grab hit $5, folks. We got over those 400,000 shares. Grab right there, back to $5.
Nice. So private equity is dealing with that whole thing happening. Private equity, the way that they usually juice up their returns a little bit is this thing that Buffett explained, where it's like a house of cards, right? Where I buy something for $10, I sell it to you for 11, you sell it to Steve for 12, Steve sells it to Adam for 13, and then you sell it to me for 14, and I IPO the damn thing at 15, and now it's like, oh my God, look, a 50% return, right? It's magic. It's like the SPACs thing. Remember how the SPACs did it? It was like, oh, look, there's a really good business. And then who ended up being the bag holders? All the shareholders that bought it in the public markets. So the thing is, a lot of companies haven't been able to unlock that value. So now the LPs, which are these sovereign wealth funds, whatever, they're demanding their money. They're like, hey, listen, we need money to run our organization. So they're taking matters into their own hands by either selling some of their stakes in credit, which is like loans rather than just equity. And then there's other things, but basically this is starting to show that there is some turbulence in the private equity markets. And
is it something that people should be scared about at all?
Well, in the short term, no, but private equity is starting to get into insurance as well. And that was brought up by Ajit Jain during the Berkshire Hathaway meeting, right? Where he said, look, one of the reasons why our operating income when it comes to insurance has been actually going down is primarily because you have all these people coming into the space, like all these private equity firms, because they're trying to raise permanent capital. They're trying to raise that money so that this way they can keep recycling this thing. So to be honest, it sounds a bit like a Ponzi scheme. Don't get me wrong. I hope it's not a Ponzi scheme, because if it is, then we've got some major turbulence ahead. But yeah, I think that's one of the major things that everyone should just be on the lookout for, to make sure that private equity isn't just keep an eye on private equity. That's why you see KKR, Apollo, and all of these companies, if you look at how they've done, they've actually tanked a lot. Look at KKR. Go to your thing and go to a 5-year chart or a 1-year chart, whatever. So you see that giant drop, and that was before tariffs. So it went from 160 to 116. See that? Then if you look at other ones like Apollo, same thing. See? So this is where you have to be very careful with the current situation that's happening. You're muted. You're still muted.
Sorry. Yeah, ISM, really good, 51.6 in April 2025 versus a 9-month low of 50.8. That is something the market's liking right now. You got a green candle on the S&P, even though it's red for the day. Kris, here's a question. Are you nervous that Buffett is not buying anything?
It's always, whenever he raises cash, it typically means that there's a really big problem coming our way. One of the things that he mentioned that I took me back a little bit because it was a little scary. Where he said that dollar, like it's never turned out well when a country debases its currency.
Yeah.
And the thing is, the U.S. may be on that path. And so his thing is, holy shit, like that's bad. So his thing is maybe long term, I don't want to be in the US dollar. And I'm like, whoa, did he just honestly say that? Like, what? So, and the part that sucks about this whole thing is that in a nominal sense, it's good because it's like, oh yeah, you can see like, things go up, but the real value of the dollar not being able to buy at a reasonable price on things it's not good long term. So it's funny that he's a little bit more bullish on other currencies, which I've rarely ever seen Buffett do.
Well,
so it's not that
he said they're not selling Japan for the next 50 years.
Yeah.
Right.
Yeah. And it's interesting to see that dynamic. So I think a lot of money is, I don't know, the Trump administration has done a really bad job of like creating value for the dollar. And so the dollar's been weakening. But technically speaking, if you think about it, just from like a weakened dollar is good for us in that our exports tend to grow. Our services tend to become cheaper for foreigners to buy. So that trade imbalance does go down, but it's, like I said, it's not good because for us as Americans, when you go overseas, you're transacting in dollars, right? So you want to have a strong dollar because it benefits you. Like I want to go to Japan and the yen being $155 versus 140. It gives me a lot of buying power when I'm over there. So, yeah.
What do you feel about hedge funds being the highest short exposure they've had since 2022?
I don't know. They're probably seeing something that's causing alarm. I mean, it's probably like the tariffs thing, But if you think about it, you look at 2020, they went short literally like Q2, which was literally the bottom.
Yeah.
No. Go to the chart again. You can see, look at what happened in 2020, right? They went from COVID. Yeah. COVID. Look at the COVID chart, that giant candle up. They literally went bullish Q2 of 2020. And then the liquidity taps all just literally were unleashed by the Fed, and boom, all of those things reversed in a heartbeat, right? So I think, to me, whenever I see max short like this, it's usually looking backwards, which does mean that, hey, maybe there's actually, possibility that we're likely to be more towards the bottom of things rather than being at the top,
Okay, so if Buffett has almost $400 billion in cash, Fartcoin is at $1 billion market cap, you got S&P 500 trading at 22 times. Why is this not similar to February of 2025?
I don't understand the question.
Like, why are we not topping if you got the obvious indicators of Buffett having all this cash, Fartcoin, a stupid coin, being worth more than real companies? Like, I mean, because in March we looked back on February, like, oh, that was obvious. Are we going to in June be like, oh, that was obvious in May again? Or is there something different?
Yeah. Well, it's the tariffs, right? There's so much uncertainty around the tariffs. You don't know what you're going to get. And Buffett, he's a value investor. So he's going to buy things, but he's going to want a pretty substantial discount to its net asset value, like its intrinsic value. So if he goes out there and deploys capital, it's typically when things are really, really bad and he's getting like the best deals in the market, So the other comment that he made about, hey, what we saw in the last 45 days, that was nothing. I was like, God damn, that's another, like, is he expecting like a 20-30% more correction from here? Is that why he's loaded the hell up on cash? So this is where things can get a little bit scary, and I still am under the impression that the Trump administration is trying to get interest rates lower by keeping the economy somewhat tapped, like keeping a lot of gravity in the market with uncertainty, so that this way consumer spending goes down, business spending goes down, so that eventually when things start to, thaw up a little bit around rate cuts, things can go higher again, And so right now, if you see when the market starts riding higher, like we had 8 consecutive days of positivity. What does Trump do last night? Let's tariff movies. I was like, God damn it. Like, just come on, brother. Just ease up for a little bit, but he won't. You know?
You think he did that to create a little bit more pain? You think that's the idea there?
Seems like it to me. I mean, the other thing is this kind of punishes Hollywood, not directly, because they could say, oh, look, I'm supporting Hollywood with tariffs. Yeah, but what you're also doing is creating a system where other countries are going to tariff Hollywood. You know, so if you think about it, if we tariff them, the proportional response is the other country is going to hit us back. And the thing is, who's going to lose out in the end of it? It's our movie industry that's going to, like, okay, here's a question. What are some of the things that are being made overseas? Like, and not to mention, this is services. It's not even goods, you know?
Yeah.
So,
I mean, I agree. I think he wanted to create a little bit more volatility in this, but I also think he thinks if he's not going to win the trade war in terms of physical goods, if there's any level of services he could attack that are kind of obvious, which are like, hey, we should have American-made films. People can generally agree with that.
yeah, but I mean, look, here's the thing. If you make a movie, right? Let's say you have all these Hollywood people or whatever, and then you make a movie and you have it set in Tunisia as a backdrop. Yeah, you could try to do it in the Nevada desert, but the cost is going to be so much more, and which means that now, you know, yeah, like you're basically going to make the movie as unprofitable as possible. Not to mention, if you hit other countries with barriers like this, if they start hitting barriers, that means that your movies are going to do less well in their markets.
Right.
And the thing is, it's if you think about it, it benefits someone like Netflix and like other content providers to basically do the lowest reasonable possible so that they can have the most wide distribution. So imagine right now, you take $100 million, you make a movie, or a TV series, whatever, in Tunisia, and then you sell memberships to through Netflix and everything else. What ends up happening now is that, yes, there's US consumers, but then there's also consumers all across the planet. And all that money comes back where? It comes back to Netflix. Right. And Netflix, being a US company, gets paid, and us as shareholders and taxpayers get that benefit. So it just makes no sense to go this route unless you're trying to get some kind of like policy change. You're trying to hurt some incumbents that are out there. But everything that he's doing right now is destroying the credibility of like the US to be a reliable trade partner in the future. Before it was goods, now he's attacking services, which is, it's like, come on, brother, you're not, it's not good. This is not good.
But in the midst of that, you think trade deals are coming soon. Tesla, by the way, down 3%. Like, do you think this week at least we're going to get some news, or how are you thinking of this?
I mean, that's one of the reasons why the market is up, right? The anticipation of rate cuts and not only rate cuts, sorry, tariff cuts. The administration keeps like every other day just throwing out like, like trade deals are coming. So I think a lot of companies are just, saying, oh, look, we want to be higher. We want to ride that wave higher. So I think that's what it is,
This is Buffett, by the way, downplaying the recent volatility.
In a dramatic bear market or anything of the sort. I mean, it like some pointed out, if I've had 250 trading days a day, for however many years I've been old enough to trade stocks. Got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240. And that was August 30th, 1930. And between that and the low, it went from 240 to 41. I mean, so if people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy.
Basically, Buffett telling everyone to stop bitching and realize that this is a very long game. And you got to be able to handle the volatility. It's just in this new 24/7 news era, it's like it's hard not to react, to every little piece of news that's coming out.
Yeah, man. My thing is, I think long term, yields are going to eventually collapse. I think there's too many indicators for me to look at when it comes to housing, now with oil, and then 2-year. They're all signaling, a recession on our way. Like it seems like the most obvious thing. And then the data comes out and the data is like contrary to that. And it's like, how does that work out?
Do you think oil prices is good right now, or it's an issue we're going to have?
I mean, it's an issue if you work in the oil patch. Like, $55 to $60 is break even for most, I would say, super majors. With the independents, it's probably closer to 65, 70. So that's not good. If you work in the oil industry in Texas, Oklahoma, and sometime in the Bakken and North Dakota and stuff, that's something to worry about. Because the thing is, like, okay, usually with the oil patch, they take on leverage during good times when prices are high. They drill for oil, they produce oil, and then once that oil comes out of the ground, they sell it, they make a profit, and they pay back that debt. The challenge is if oil prices come down too much, it becomes uneconomical to drill new wells, right? And the wells that you've already drilled, you're going to have problems with, because especially with shale, unlike like your traditional oil fields where you just stick it's a straw down and pull oil out. With shale, you have to constantly redo them, because what you're doing is you're going in, you're fracking, and then over time the production on those wells dramatically goes down. So then you have to drill a new well. So U.S. production may end up getting impacted. I wonder how much of this is politics, where Trump has basically said to Saudi Arabia, who's like the main OPEC, decider in chief, what to do. And the thing is, if you want to crush inflation, you get the Saudis and the OPEC members to basically pump. And the thing is, OPEC has said that they're going to be rolling back their production cuts, and they're actually going to be increasing their production, which could sink oil into the 50s, which is clearly working right now. And if that happens, then kiss inflation goodbye, man.
So two things. A, if based on what the Saudis are doing, is that why the airline stocks are up? And B, does that mean Jay Powell seriously needs to think about cutting soon?
Well, I mean, it's an input cost for a lot of businesses, right? So cruise lines, airlines, it's a input cost that the companies get to basically bear. So if you have lower input costs into the future, that just increases your profit margin. So if oil is at $100 versus oil at $50, that's a big dramatic, difference in pricing. So that impacts your margin significantly. The other thing is, like, if you look at certain airlines, they can actually do hedging programs where they can hedge out their future gas prices when things drop like this. And that helps them, because then it gives them this profitability for the next like 2 to 3 years without worrying about oil prices. So if you look at like a company like Southwest, they typically do that, where when oil prices are low, they load up on a ton of future fuel contracts at a cheap price. And so this way, even when oil goes up, their total cost is not, it doesn't go up. Cheap oil means margin expansion for chemical companies too. Yeah, because the thing is, like, they're basically buying oil, cracking it, and then getting all the solvents and all the other stuff out of it. So, lower oil is good for the consumer. It's good for business. It's good for inflation. So thank you, Saudi Arabia, for helping us out here.
Why are the Saudis doing this right now?
I don't know. Well, the official reason is because there's a couple of members within OPEC that are like, we need to pump more oil. They're not living up to their production cuts. So basically the Saudis are like, screw it. Why are we're the only ones that are going to do it? But it's more likely that Trump coerced them. Yes, I agree. Like someone said it in the chat. So yeah.
All right. So we are back at greed on fear and greed. I mean, last question for you, Kris, any specific moves you're making in your portfolio, or just kind of going steady?
I'm pretty hedged with TLT. So one of the things I'm thinking of doing is loading up longer TLT spreads going into 2027 now, because if inflation is being crushed, and at the same time, the markets are screaming that, hey, listen, inflation is coming down, then longer term interest rates are likely to come down. And the goal of the policy goals of the administration align with that. So, they basically said, we want to get lower like 10-year yields. If you want an economic expansion, one of the ways that you do it is by getting long-term yields to go down so that people can borrow more money and, and reinvest in business and everything else. So everything that's happening in the markets right now, to me, seems like, this short-term pain for long-term gain theory, that's where it comes from. So in the short term, we're going to crush the businesses, we're going to crush consumers, but that means that in the future, it gives us the ability to refinance our debt at a cheaper price, in which case now you have business expansion in the future. So,
yeah. And guys, this 10-year spiking up, it's not that dramatic given the markets are up. So, I mean, if it really starts pumping, then we have an issue, but really got to see stocks go down.
The reason why, and this is something that I hope retail investors, they start following, because it's really something that will help you dramatically. The reason why you follow the 10-year is not because like you're looking for, 10-year value, whatever. It's because all the other loans that are out there that are longer term loans, they're based on this and the Fed funds rate. So if you do floating rate, the Fed funds rate matters because that's what you're going to get overnight. So if you have, let's say, a SOFR rate for, that's like SOFR plus 5, that means that if interest rates on the Federal Reserve is 4% and you're getting 5% on top of it, you're paying almost 9% interest. But if, let's say, the Fed drops that down to 1%, now you're going to pay 1 plus 5, which is only 6% now. With the 10-year is when you're issuing new fixed term debt, longer term debt, what you're saying is, well, I can right now go out and buy a 10-year treasury for, for 4.3%, which means that now you're competing against that, right? So if you want to, let's say, borrow money for 10 years, they're not going to lend it to you for 4.3%. They're going to say, I want 7, I want 8%, depending on your credit rating. So if the 10-year drops down to, let's say, only 1%, now you can go to the bank and say, hey, let me borrow money at 6% instead of that higher interest. And so that works out in your favor as a business, right? So now with that in mind, your margins expand, your business can expand, people can buy more homes, right? That's why if you look at like the 30-year mortgage, when you go get a 30-year mortgage, a lot of it is based on that 10-year treasury. A 10-year treasury drops down to 2%, you can get a pretty attractive mortgage, which is what Scott Bessent really wants. So my target for 10-year is below 3% by the end of 2027. I'm not sure how much they can get it down by the end of 2026. Towards end of 2026 is below 3, and maybe around 3.5 by the end of 2025 should be around 3.5-ish. But we'll see.
We have a Trump tweet. This is a long one.
What was he saying?
I don't even know how to read. The Democrats are really out of control. They have lost everything, especially their minds. They're radical left lunatic. There's nothing macro about this. This is just him getting upset at the Democrats. Again, this is
Save our country. Auto pen, shifty shift. I think he's starting to lose it, dude. I don't know about you, but Trump 1 seemed at least somewhat coherent. Trump 2 is just like, he's going into another level of like, I don't know. I don't even know what to call. He's like we definitely need to issue some, what are they called? Age limits on the presidency. Like, you can't run if you're over the age of, I think it should be Social Security. If you're collecting Social Security, you can't run for president. Sorry. Like, we just don't,
I mean, obviously, I don't think it's ageist to say that, if you're approaching 80, it's a little tough to run the country,
Not to mention, you don't really give a shit because it's not going to impact you as much, right? If you're 80 something and you're like, well, the country's, like, I'm about to die in about 5-10 years, whatever policies you create are not really long-term things. You're more likely to be an idealist and go with idealistic tendencies to be remembered forever rather than do what's best for the country for the next 20, 30, 40 years,
Yeah. I mean, I think there's a part of Trump that loves this attention, and he's attacking Adam Schiff at the end. Like, this is it's all a bunch of random arguments around how he doesn't like certain things that the left is doing. And I think he just enjoys putting these posts out there and getting people's attention. But I
Yeah.
don't think it actually has anything to do with what's going on.
I mean, I was watching the interview with him on ABC, and like some of the stuff that he was saying was just very out of the world, like I don't know, it's just out of the world, man.
Like
so
what do you say?
Some of the stuff around like the Constitution, he's like, so he didn't know about what was it like
the third term?
About the terms, like I don't know, is that in the Constitution? I was like, it's pretty basic. They actually created an entire amendment because of that. Like you would think that that's a basic civics thing that someone should know, especially they're in charge of the government. But
at least he did say he has no intention on running on a third term. So that was kind of nice to hear because, for the longest people were saying that he is like serious about it. And he explicitly said, I have no intent. I mean, let's listen to it right here. But yeah, the Constitution part was weird.
Selling hats that say Trump 2028.
Yeah.
Are you seriously considering a third term, Mr. President, even though it's prohibited by the Constitution? Or is this about staying politically viable?
I will say this. So many people want me to do it. I have never had requests so strong as that, but it's something that, to the best of my knowledge, you're not allowed to do. I don't know if that's constitutional that they're not allowing you to do it or anything else, but there are many people selling the 2028 hat. But this is not something I'm looking to do. I'm looking to have 4 great years and turn it over to somebody, ideally a great Republican to carry it forward. But I think we're going to have 4 years, and I think 4 years is plenty of time to do something really spectacular.
All right. That's what you got. Kris, people love your haircut, man. You got to keep wearing it.
It's funny. Someone said it's a toupee. I'm like, sure, bro. Here. It's like, this is a toupee, right?
Dude, I like
you
it.
You can actually see it growing out of my head. So
no
I don't know. Let me
hat,
see.
Kris, this is the future. No more hats.
See? Is that a toupee?
I like it. Every time. You got to get a new style for us every day. It'll be good.
Nah, I just didn't comb it right. So I just woke up and just got to it. So yeah, I think, look, I know a lot of people, they want to believe that Trump is doing what's best for the country. And I agree. I think there are certain policies that do make a lot of sense. The only thing is, in the short to medium term, it can hurt a lot of people. And I mean, if you're good enough in the market, you'll be able to navigate it. Not everyone can navigate it. And there's real world consequences to the people at the most bottom level that you have to keep in mind. Like right now, I know some people here, bro, if you lose your job because of something like this, of course you're going to be angry, right? And a lot of the policies that he has actually is causing a lot of challenges among the small and medium-sized businesses that do business overseas. So, it's unfair to say, like, look, everyone has to just suck it up and deal with the pain. It's like, be a little bit better about that. So we'll see.
All right. One more question for you. We do have Mexico's president saying, hey, good communication with Trump. We've reached deals. So that's good. Markets should like that. If we get the official Mexico announcement soon, that would be important.
I always thought our alliance with Mexico should be growing so significantly over time. I mean, they're literally our neighbors. They are one of the fastest growing in terms of population and GDP in our own neighborhood. Like, if we support Mexico, turn them into the next China, I would love that. I would love to have strong allies in the north in Canada, strong allies in the south in Mexico. That would be like, and we could turn like this into fortress America, basically. Our alliances should be growing significantly in Latin America. I think Latin America is one of the most underrated parts of the world. And the fact that I see a lot of, believe it or not, Latin American countries, which used to skew heavily socialist, starting to go more capitalist is actually a really big, I actually believe in Latin America more than I believe in India. I think Latin America has a better future, better and brighter future,
We do have another piece of breaking news right here. India offers 0-for-0 tariffs on auto parts and steel, according to the BBG.
That's great.
I think the U.S. might take them up on that. That wouldn't be horrible.
Yeah.
Kris, 2 final questions for you. Hims, any thoughts on this stock at all?
I haven't done as much research as I should on this. Like a long time ago, Sam Mercier brought this to me. I think Adam was heavily invested in this at $8. I just never really paid attention to it. And it's done really well. I did look at the numbers like on a raw, let me look at how much they're generating in EBITDA and income. And it seems like it's a growth company. So it's not something that you could value like a traditional business, So yeah, it's hard when it comes to pharmaceuticals and all that stuff. I don't know what the moat is, but people believe in it and people like it, so it'll keep doing what it's doing.
Okay, and then Palantir, what do you think happens today on earnings?
I think it goes down. But then again, I've always thought that Palantir should be much lower than what it is. So I'll just keep it at that. One of the comments that's actually very interesting. They said Mexico cartels are the major problem in Mexico. Every country that usually develops has this problem early on in their life cycle. So if you look at like the US, we had the mafia, right? We had a lot of corruption with the mafia and gangs. But what tends to happen is as countries evolve economically and they get bigger and bigger, usually the criminal element tends to get basically pushed out by private industry. So if you think about it, if you think about Mexico, believe it or not, the cartels, they all own a lot of legitimate businesses. Like if you go to Cancun, you know what one of the safest places to be is in Mexico is? It's in Cancun. People think like if I go to Mexico, I'm going to get robbed. Nope. You got cartel protection there because the cartels all own those resorts. So they will not let the tourists get messed up because that's how they get all that money.
Right.
So that's why you ever hear about US, like there's very few incidents where US citizens ever get like in really deep shit in Cancun when they go on spring break or anything. You would think that a country infested with cartels, you would hear more about, oh my God, cartels kidnapped this and cartels did this. You don't. Why? It's because they're in bed with private business,
Yeah, and in the development of that life cycle, eventually, your point is they would be rooted out or weeded out, but it doesn't happen.
I mean, look at JFK. JFK's family was all based on bootlegging money. Yeah, they're all legitimate now, but they all started off as gangsters, bro. That's just the story of America. Everyone starts off as a gangster, and then they build that wealth up, and then they go legitimate. And the reason why I bring that up is because you saw Godfather. What did you think?
Well, the first 15 minutes were really good, and I will be finishing it up over this week, and then I'll.
You didn't watch the whole thing,
dude? I couldn't. No, I didn't watch the whole thing. No.
There's a part 2 and a part 3, right?
I heard, and everyone's saying part 2 is way better than the first one.
Yeah, it is. It is. But see, that was the thing. Like, if you look at how the mob worked, like with the Corleone family started in as the mafia, then they transitioned to casinos and then owning legitimate businesses, So that was the goal of Michael Corleone, which is get out of this criminal enterprise, So, yeah.
I'm going to finish it this week, hopefully. Kris, thank you for coming on. We'll see you tomorrow.
Take care, brother. Have a good one.
Take care. Later. All right, let's get a little bit more coverage on Berkshire, and then we'll keep going from there.
Look at related to Buffett, as he said, that he follows and he watches. And there's a great chart. This comes from Ben Emmons at FedWatch Advisor. So the first one in blue is the S&P 500 market cap over nominal GDP, which is just interesting. There's sort of this twin peak in that chart. And then the second is how much cash Berkshire is holding as a percent of their assets, and that includes T-bills. And we know that has skyrocketed, David, to more than $300 billion. Buffett himself even made a joke for it that he would not be so noble to withhold investing myself just so Greg Abel could look good, which is why. But I do wonder, Bob, people look at these to figure out what Buffett's doing and how he's feeling about the economy and the world. What does it tell you?
I think it tells me he's getting a lot more cautious. I mean, just look at the cash holdings now. He seems very content by his demeanor there to keep a lot of money in treasury bills right now. His position in Apple is a little bit smaller. And the important thing is he is a guy who sits there and still looks fundamentally for value. And I don't think he sees a lot of it right now. I mean, he's got a point here. The value of the market is still very high. We're still almost 20 times forward earnings. If you're talking about a traditional value guy like him, there may not be a lot that's that appealing to him right now. He may be waiting for a better opportunity.
By the way, and on that note, one of the big holdings that he bought were banks, obviously. Citigroup was one of those banks that he bought in 2022 and has been selling some of the shares along with Bank of America at the end of last year. So later we're going to sit down with Jane Fraser, the head of Citigroup, in the 1 o'clock hour on CNBC, and she's been to those shareholder meetings, and she has some thoughts on this transition at Berkshire.
All right, we have Bessent at 11. So Bessent's speaking at some global economic conference in California. So hopefully he says stuff that the market likes. This India news is actually pretty big. India offers 0 for 0 tariffs on auto parts and steel. I mean, I feel like they're leaking some of these details because the frameworks of the deals are already in place. At least that's what Lutnick said last week, and a lot of them are hinting that it's going to be Intel, or not Intel. It's going to be India as like the main first partner. So that could be something that potentially moves markets. Ackman also said the next step on tariffs should be a 180-day pause. I actually think Ackman's going to be right on this. I think there's a world where by the end of the 90 days, which comes up in another month, Trump's going to need more time, grab right here at $5, and he's going to issue another pause. And that pause will be basically indefinite, even though the markets will still be on tilt. But I think the markets will figure out, hey, like we're probably not going to have these massive tariffs. And so that also wouldn't be the worst thing going into the rest of Q2. S&P 500 right here down 0.5. Dude, if we go green on the day, that's 10 green days in a row. It's going to be tough to get that green day. But I think there's a shot. Again, ISM did beat against the expectation. So ISM, we had a really good print, which was nice to see. If we can actually find a way to go green again today, it would just be encouraging to continue to see some of the momentum that has been holding up. Look at the S&P right there. It's trying. It really is trying. It was down almost 1.5% today. Somewhat of a recovery right here. And then we might end up going green. Apple, there you go. Well below 200, 3.2% down on the day. You know, it's interesting. I think the reality of Apple's lack of growth versus its future prospects is catching up to them. I spent more money at Apple this weekend. I bought an iPhone 16 Pro Max, not for myself, for my mom. She lost her phone in Germany. She was coming back from a wedding in Germany, and so I got her a new phone. And you know, when I went in on a Sunday, it was pretty packed, dude. It was pretty packed. I got a MacBook for myself last week. I got her a phone, and like I mean, there were plenty of people there buying more stuff. And the sales lady tried to sell me again on the Apple Intelligence for the iPhone. And so I let her show off the features, even though there weren't any good features. But the point is, I bought the phone because like my mom's not going to an Android, right? So it's like those $1,200 Apple got from me, and that continues to keep their revenue afloat, but it's not necessarily growing their revenue in any meaningful way. So I guess the market's trying to come up with the reality of just like, hey, yeah, you know, Amit will get another iPhone, but is that going to lead to this massive level of growth or this super cycle that we should expect to justify a 35 times earnings multiple? And as Chad says right here, as much as Apple pisses me off, there is still no better real estate. Dude, you would have to pay me, or you couldn't pay me enough to use Android. And I know a lot of you guys use Android. That's totally fine. I have nothing against it. But I've had an iPhone since 2010. Like, for me to switch to an Android, it's just not happening. It's just not happening. Same thing for my mom. She's had an iPhone for like at least 15 years. She's not going to switch to an Android now. So, I mean, look, I only got the latest model for her because she just needed a new phone. I'm not upgrading my phone, even though it's cracked and it's like basically falling apart, to be honest, because it still works fine. So I feel no need to upgrade. But that is the issue for why, you know, their sales are flat. But for the people that want a new phone, you know, a lot of times they go to the iPhone, and it doesn't seem like that trend is going away anytime soon. I had an iPhone since I was 13. Since I was 13. So basically, yeah, since I was in 7th or 8th grade, the iPhone 4 was my first iPhone. I had a little T-Mobile flip phone when I was in 5th grade. And then I got to middle school, and then I finally got the iPhone. And then I've had it ever since. Like, I have notes on my Notes app in my phone from 2010. That's how crazy it is. But does that mean you pay the type of multiple people were paying on Apple for the past year? Probably not. It's just hard for them to see where the growth is going to keep coming from. William says, GoTo had 14 board directors. 4 of them just resigned. That's a 30% reduction in members. Yes, I think that's why Grab is up today, to be honest. I don't know who the board members are or why they resigned. All I know is that if 4 out of 14 members leave the board, I would tend to think there's going to be some things happening in the company, and maybe Grab will be playing a role in acquiring them. So again, my biggest thing for Grab is that, dude, they didn't spend a single penny on share buybacks. And they had $270 million that they could have spent. They could have bought it in the low 4s, 390s, and they didn't. And that's probably because they need the capital because they're going to be making a big deal. And not buying a single share when you've allocated that much for buybacks, to me, is them basically signaling that they have better plans with the money. SoFi right here, 1278 SoFi, up 0.62%. Robinhood is down about 2.4%. Palantir, 122.46, down about 1.4%. And then NVIDIA, that got not downgraded, but kind of Piper Sandler came out with a more cautious note on their data center revenues as a result of them losing China. They are down about 1% on the day. Would Grab pump on the news on if they bought GoTo? Yes, I think so. I think, look, if Grab buys GoTo, you're talking about margins that become way less competitive because this is their biggest competitor. You're talking about 100 million users. You're talking about 1.2 billion in revenue. You're talking about a massive consolidation of ride hailing and deliveries all in one super app. I mean, and you're talking about Indonesia, which is the largest market in Southeast Asia. So I think it's, and I looked at GoTo's financials over the weekend. They're good financials, but they're not enough to become a global business that can deliver shareholder value. The stock is down 80% since they went public. You know, they have like $300 million in cash. Like, they just don't have the war chest that Grab has. And I think Grab knows this, and so do a lot of their Indonesian investors. Alibaba has a 9% stake in GoTo, so they're probably thinking, hey, we want to get liquid, and we don't want to be stuck in this thing for the next decade. And so I think it's Grab's opportunity. It's just going to be a question of if it ends up playing out. Lyft and Uber also doing great. Lyft right here, $13 on the day. That's up 3%. Uber, Grab is also kind of in that Lyft Uber category. Uber's up 1.64. And then DoorDash, this one also up 0.5. So all those ride hailing companies getting some love. Where's AMD? It was going opposite of the semis today. Yeah, AMD up 2%. Getting a bit of a pump going to earnings, which will be tomorrow. Any thoughts on CrowdStrike? I love CrowdStrike. I think it obviously is expensive, but their top line growth is incredible. It's up 2% of the day. They have earnings coming up in a week. They are the leader in endpoint security. And if you're paying the premium you're paying for them, you believe that they're going to compound at 30% at least for the next couple of years. So I don't own it, but I think CrowdStrike is a strong one. I do think, it's kind of like Palantir, right? Palantir at 120, could it go below 120? Of course. CrowdStrike could definitely be below 450. But if you buy it, you believe that there is just so much growth and momentum that the street is going to continue to give it this premium, even if that premium can go up or down on a certain day. So I think CrowdStrike right there is definitely a leader when it comes to endpoint security. Amazon right here, 187. Google actually getting a little bit of love today as well. Google, one of the Mag 7s that's green. Tesla's the one that's getting hit. So Google, 164. That's up 0.5%. And then Tessie, wow, 4%. What happened to Tessie? Why is that one taking a hit? Down 4%. Oh, Elon did a new interview over the weekend. And basically, I'll show you a clip right here. He was talking about his admiration of Tesla and how much he loves it. So let's pull this up right here.
Just bought their first Tesla to support you.
I'd like to thank everyone who has supported. A friend in need is a friend indeed. So I'd like to thank everyone who's gone out there and support and bought a Tesla in support of Tesla and me. This is in stark contrast to the crazy people that are running down Teslas. It's not like an investment. It's like a child. The company to me is like it's not just a bunch of money. It's a company that I've grown and nurtured for over 20 years.
What do you think, and what are you going to focus on in the coming years that you think could really revolutionize humanity?
Tesla, in a few months, will release unsupervised full self-driving. So the cars that people are driving right now, the cars that you can buy from the factory, will be driving around by themselves with no people in them.
Wow.
We would call unsupervised full self-driving. So there's literally no one in the car on public roads. We'll start that in Austin in a few months, in June, and then we'll rapidly expand that to the rest of the country. In fact, anyone who has Tesla now, if they try self-driving, they'll it should work very well. It should be rare that you need any intervention. In fact, in the future, I think it'll be unusual to see a manually driven car. It'll be like seeing a horse.
Interesting.
Yeah.
So in the future, it will be strange to see someone actually driving themselves in a car.
Yes.
And what about medically?
Tesla's also creating a humanoid robot, Optimus, which I think everyone is going to want.
So you got Elon saying that he's obviously very, very bullish about Tesla's future prospects and believes that it is going to continue to do well. The question is going to be, what happens when the robotaxi actually launches? How does the market actually interpret its competitive landscape against all the other robo-taxis that are out there, I guess you can say, with Waymo? And then how successful is it going to be in Austin? Those are the upcoming questions for Tesla. I really struggle to see how Q2 is going to be good in terms of the numbers. And so obviously at this point, the numbers don't matter given where Tesla's trading and the market cares less about the numbers. So any positive news on Optimus and robotaxi should be beneficial. And the market's kind of just decided that those are the two things that they care about more than anything. I think you would need to get some really bad macro stuff or some just horrendous earnings that are even worse than Q1 to see this thing, tank to those 170, 180 levels that people were thinking about a month ago. But if we don't do that because the worst is baked in for the macro and, we're not going back to 4,800, then maybe Tesla gets to normalize at these levels. Palantir back to 123.27. It's going to be a big one today. It's going to be a big one today. What do people think in terms of revenue? What's your number on revenue? What number do you guys have? The market is expecting 862 million in revenue. What number do you guys have? I'm thinking minimum of 890, and more optimistically, I think we hit 900. I think that's the number. If we hit 1 billion, bro, if we put up $1 billion in revenue, because the thing is, if we do $1 billion in revenue, the market's going to expect $1 billion in Q2, $1 billion in Q3. Like, you can't go backwards once you embrace it. So I think strategically there may be a world where Palantir doesn't want to show that $1 billion yet, because then the pressure is on to continue it, and they might not want to put that pressure on themselves, especially if they don't need $1 billion in this quarter. But if they do put up $1 billion, I mean, we're talking about close to 50% growth, and that means Q2, Q3, Q4. You're getting close to Alex Karp's 4.5 billion that he predicted a couple of years ago, and that would assume on a CAGR basis, Palantir has been growing 30% since 2022, which would be pretty incredible. So 957, 999, 950, 890 to 905. I think 890 to 905 is not crazy. If they come out with 920, 930, dude, it's going to be wild. Like, I am convinced we are getting 40% growth. The more I thought about it over the weekend, I was like, it is very hard to imagine not seeing 40%. I would be disappointed, let's just say that, if we don't hit 40%. And I kind of think the market's going to be disappointed as well. Like, if we show, 37, 38, which is good, but it given where we're trading at, like, we got to be honest, I don't know if it's going to be enough for the market to love it. Now, it could still pump on those numbers, but it wouldn't be a big enough of a beat for the market to be like, damn it, they did it again. Getting close to 42, 43, 44% growth, that's where the market's like, all right, we can't really ignore them anymore. And to the market's credit, they haven't ignored Palantir. Obviously, we're seeing what the stock is trading at. But it's going to be one of those things that is undeniable if they can put up that growth. What do you think of small caps? Small caps have been eviscerated. I don't think this is a good investment. I mean, they are down 10% year to date. The small cap thesis is just tough to get behind. The only catalyst they have is rate cuts. But even when you cut rates, and this is the issue I've had with small caps since like 2023, is that the companies aren't good. There's not good companies in the Russell. The Max 7 are good. Like, I don't own Apple over the small caps, because you could just sleep well at night knowing you own a real business that, even if the multiple is high, can weather through any financial macro condition. But the Russell, it's just like you're betting on earnings expectations being better than the S&P. And if we have a recession, or if we have any level of slowdown, which we're seeing in some of the data, I don't think IWM does well. So, yeah, I mean, I don't think it's a horrible investment. I just think there's, like, when NVIDIA and Google are trading at these levels, to assume there's some unique alpha inside of the Russell, there might be, but it's just not exciting even from a mental perspective of just like, hey, I feel safe in this position going into the next couple of years. SMCI right here, trying to get a little bit of a green candle. That's up 1 point or down 1.84%. Roblox down about 2%, and then Palantir 123.35. That's quite a statement to throw all small caps under the bus as not good companies. Well, I mean, compared to the Max 7, like they're not. Small caps have a lot of debt. We still have rates that are relatively high. Even if JPAL lowers them by 25 basis points, it's not like their cost of borrowing is going to magically become that much lower. Like small caps are crappy companies that thrive in a low interest rate. I think the reason Tom Lee was so bullish on them is because he thought rate cuts were coming dramatically, and rate cuts have come, but not dramatically. I mean, 2024, it took us until September to get rate cuts. And as you can see, Tom Lee doesn't talk about small caps anymore because he knows like the overarching thesis is just not that exciting anymore. I think individual small cap names like a HIMS, for example, is exciting. That's a $9 billion company. That's not really a technical small cap, but to me, that's a smaller cap company. But the overall index, I just feel like is not that interesting. Gold ETFs right here. You can see this chart from China. A lot of money going from excess cash in China to gold ETFs. So that theory that people had about China's been buying gold and that's been pumping it, that seems like been correct. Gold prices right here are slightly up on the day, actually more than slightly, up 2%, which is nice. But the Chinese have been deciding to buy some gold. Any update on AIRO? So that company went public. This is a drone company. Oh, wait, no, they didn't go public yet, right? AIRO? Yeah, they didn't go. I thought they were supposed to go public like 2 weeks ago. Huh. I guess they haven't gone public yet. AIRO. Has anyone bought this? I haven't seen it. I just looked it up. It's not there. So they were supposed to go public a while ago. I guess they're still in the queue to go public. But yeah, no update on them. We haven't had any new IPOs outside of Webull, which actually has started to, come down dramatically. It was at $80. Now it's at 15, down 6%. I mean, I feel like there's a much better value proposition here than when it was at 80, but this one took a pretty dramatic hit. You push for Grab, that's a small cap, then you say small caps are bad companies. Yes, as an index, I think all small caps together, I would not be buying over something like the Max 7. But again, individual small caps, I mean, I think that's kind of logical, right? Like there's individual names that could be small caps that are really good. Grab, for example, has no debt and $6 billion in cash. The average small cap has a lot of debt, very little cash, and the earnings growth can't really sustain itself in a high interest rate environment. Or it's not as easily sustained in a high interest rate environment. Grab's a bit of a different animal here. So, do you think Netflix is going to sell off because of the tariffs on movies? I think yes. I mean, we've already seen it, right? But it's look at that, dude. It was down 5% pre-markets. Now it's down 2%. I don't think this is an issue for Netflix. Also, Trump hasn't really stated what this tariff foreign film policy is. He kind of just put out a tweet. So I don't think it's anything really specific that we should be worried about. But could it have an effect on it? Sure. AMC is down 2%, and then Disney is down 0.2%. I think Netflix weathers the storm. Netflix figures it out. They're just too powerful of a company, too good at streaming. Yeah, I agree with Doug. It's a stupid reason to sell off Netflix. Amit, are you buying HIMS before earnings? No, I'm not buying HIMS before earnings. I look, dude, I still have to do due diligence on HIMS. I don't know enough about it. I think it's a very undervalued company from what I'm seeing, but I'm not going to buy it right before earnings because earnings, you don't know what happens, right? And my conviction there is not really that set. But look, if people make money in HIMS, I'm happy for you. I mean, like I this is one of those names I'm not emotionally attached to. So I had it, sold it at this price, made some money. If it gets back a little bit lower, then I'll buy back in. But I don't think it's it's the most exciting name. What makes it really exciting outside of like the retail hype that's there is that I don't understand the short interest. And if someone can explain to me why this thing is short at 33%, I would love to know that. That's the real part that I think people care about, right? Like this is the squeeze thesis that is exciting. I also like it for the premium, so I might sell some puts on it because I think the premiums are really nice. And if it goes down 1 or 2% today, maybe I'll sell some puts before earnings. But why is this sold 33% short? Like, why? What do people hate about this company? Because when you look at their numbers are pretty damn incredible. Like, do people think they don't have a moat? Do people think they're a scam? Like, I don't know. But there's something here that could burn the shorts or could burn the longs if the short float ends up being right. Even Skrelly doesn't know why it's shorted. Yeah, I mean, Skrelly, he's the guy to short a company if you were going to short a company. So the fact that he didn't know why it was shorted, I think was pretty damn incredible. He also said specifically, I wouldn't short it. Which is a hell of a thing to come from him, because again, he likes shorting companies and he loves, the quantum names, he loves shorting them. Like, he tends to enjoy the process of shorting. This is what he said on a podcast a couple weeks ago about HIMS and its short float.
Quarter every year. As you guys know, I'm a big short seller. In fact, I've made, just insane amounts of money short selling, and that's my shtick. Really, what people know me for, at least on the trading side, is I love to short biotechs, tech stocks as well. I've got big short in the quantum computing space right now, so I'm not a fool or a Pollyanna. I'm very easy and quick to turn it around and short sell. But I think that this kind of growth is suggestive of a company that hasn't even sort of touched its addressable sort of space. So I do think that the founder-led company is one of the most powerful things in the world. He's sort of still a kid in some ways, and to be able to sort of grow into that and succeed at this level, it takes a special kind of person, because it kind of reminds me of Mark Zuckerberg. Zuckerberg was sort of a fish out of water being a CEO. Really hard to just become a CEO of a growing company, but he pulled it off, and he sort of navigated himself into a way where he could be the CEO of a publicly traded company. He could grow it. He could focus on strategy. And this market is as big as it gets. Healthcare is, everybody knows, multi-trillion-dollar market. It's got a lot of inefficiencies. You talked a little bit about Daraprim.
Pretty remarkable endorsement by Skrelly right here on HIMS. And, when people say, hey, founder-led companies, it's not that serious. Like, as long as the business performs, it doesn't matter if there's a founder. I just disagree. I agree with Skrelly. Like, I think that the founders are the ones that can really take companies to the next level. You're not saying you have to be a founder, but, when you look at the biggest companies in the world, Zuckerberg, Meta, Palantir, NVIDIA, like, there's so many names that really it took a founder. I mean, Microsoft, before you had Nadella, you had Bill Gates running it for the first 20 years. Like, you need someone who just bleeds, eats, sleeps the business. And that usually tends to be a founder. So I think from that perspective, that is really bullish HIMS. But the short float, I'm so confused about it. I don't get it. I really, really, really don't get why it's short this much. Trump administration says it will pay immigrants in the United States illegally $1,000 to go home. Okay, I don't think that's going to get... I don't think any illegal immigrant is going to leave one of the greatest countries in the world for $1,000. That's probably not going to happen. But I can understand the incentive structure. I don't know if that's going to end up working. Okay, I think Bessent is live right now. Let me see. Give me a second to pull him up right here. Okay, so he's not literally live, but they're about to be live. So probably in like 5 minutes, he'll be live. I'll switch over once he's there. But he's not live yet. Do I have SMCI or Micron? No, I don't have these two. They have earnings tomorrow. I'd rather own NVIDIA when it comes to any of the semis. SMCI, probably not going to have the best earnings tomorrow based on their guidance. Maybe it's baked in. But yeah, I'd rather just own NVIDIA. Grab right here at $5. Again, it hasn't been able to break above 5. It's holding it at that level. So at least we got through that resistance, but there's still a lot of back and forth selling to get it even kind of above that $5 range. Marathon and CleanSpark are getting hammered. Marathon, wow, why is this down 11%? Same thing with, hold on, Bitcoin's not tanking. Why are the miners down 10% each? Bitcoin is at 93.8. Why is Marathon, did they dilute or something? What about Riot? Marathon in Cleansburg down 10%. Yeah, Riot's down 9%. What's going on with the Bitcoin miners? What is happening right here? Those are pretty damn aggressive, dude. Holy crap. Bitcoin's not even moving right here. That is weird. I'll try to find some info on why that's happening. That is confusing. Pretty aggressive. Riot did have a bad earnings, but it's kind of reacting a week later. Celsius as well is down 0.48%. Palantir 123.27. 123.27. They got some downgrades today. I mean, I'm seeing a press release. Marathon announces Bitcoin production and mining operation updates for April 2025. They're showing a 15% increase in their mining operations, which doesn't necessarily seem bad. I don't know. That's weird, but all the miners are getting hit right now. Will we see $90 Palantir today? I think it's either going to be 140 or 90. There's a 20% implied move. So we're either going back down to 90 or like 95, or we're going up to 100. I think that's kind of how it plays out. Or sorry, 140. So I think it's one or the other. I don't think we stay flat. Staying flat would be very surprising to me. I think we're probably going to have a move that's up or down. And the question is going to be, is the growth enough to keep it elevated and expand the multiple? Or is the growth going to be good but not great? Or are we going to miss on earnings? And I don't think we're going to miss. I think it's going to be pretty great earnings. Question is going to be, how great is it to get the market excited? And for some reason, I just think like if we're at that 40% threshold, maybe a little bit above that, you're going to get the markets that are going to be rather excited versus scared for Palantir. Bessent is not live yet. Again, I will switch to him once he is. Oh, no, I think we're starting live. All right, here we go. Let me share this.
We know that innovation and opportunity must go hand in hand, and it will be built by bold, inclusive coalitions that reflect the world we're trying to realize. And we have many past successes to lead the way. We see time and again, when capital, innovation, and collaboration come together, remarkable things happen. But there's a more concerning gap I want to talk about, one that doesn't show up in spreadsheets, but is just as critical. The growing erosion of civility in how we speak to one another.
Okay, I will switch back here when Bessent is on. I think this guy's doing an introduction for Bessent, and then he'll be on. This is at the Milken Institute Global Conference. I'm sorry about the audio. Let me try to see if I can get a better stream on this. But yeah, it looks like Bessent will be talking, and hopefully we get something good in terms of trade deals and tariffs, and more updates on what we need to hear. Yeah, that audio was not the best. Let me see if I can get something that has better audio. That might be the only stream. That might be the only one we're looking at. All right, let me switch when Bessent's live. Let's switch to Blackstone CEO. He's talking right here. We'll get to Bessent probably in like 3-4 minutes, and then we'll have him on.
Great perspective on it, given all the money you've put in and potentially more. So when it comes to data center usage, demand, and what you see right now from the hyperscalers and others, what are you seeing?
Well, it's funny, David. I think that's a great question because everybody is now caught up on what's happening with the tariffs, which are obviously very important. But if we had been doing this 3 months ago, we've been talking about AI and how it's changing the world. And I think there's a bit of a danger that it's almost like there's this wall in front of us and we've forgotten what's off in the distance, which is this powerful revolution in technology. Mark Zuckerberg said last week that what's happening in AI is staggering, and we share that view. And so I think as investors, you want to remember that it's really going to impact companies' productivity, margins. On the data centers, there's a real disconnect between the headlines, which are obviously negative, DeepSeek, Microsoft pulling back a little bit, some of the chip restrictions, and what's actually happening on the ground, which is strong demand. I mean, the big hyperscalers are spending 42% more this year than they did a year ago, $320 billion.
And we got a lot of the conference calls out of the way, nobody really backed away from their CapEx commitments, even Microsoft.
Yeah, they're still spending an enormous amount. We're the biggest owner, the biggest developer of data centers, and our pipeline right now is up 25% year on year.
All right, we got Bessent. Hopefully the volume is not too bad.
Combination of guts and intellect to defy the Wall Street consensus with his heterodox approach to junk bonds, he pioneered a new asset class known today as high-yield bonds. By staying true to his vision, Mike overturned decades of economic orthodoxy. He bootstrapped entirely new industries today as high-yield bonds. By staying true to his vision, Mike overturned decades of economic orthodoxy. He bootstrapped entirely new industries by redirecting billions of dollars in capital to non-investment grade companies. His colleagues on Wall Street told him he was delusional and a fool, but ultimately history proved him right. Sound familiar? Like Mike Milken, President Trump has no shortage of critics in establishment circles, but he proved them wrong in his first term, and he is proving them wrong again today. On President Trump's first day in office, he vowed to usher in a new golden age for our country, a golden age America deserves. A golden age America deserves a golden age economy. So for the past 100 days, we've been preparing the soil. We have uprooted government waste and harmful regulations. We have planted the seeds of private investment, and we have fertilized the ground with fresh tax legislation. Next, we harvest, and we want you to harvest with us. America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you. This morning, I will explain how we plan to achieve that goal. The primary components of the Trump economic agenda, trade, tax cuts, and deregulation, are not standalone policies. They are interlocking parts of an engine designed to drive long-term investment in the American economy. Our goal with trade policy is to level the playing field for our great American workers and companies. With a level playing field, American industry can outcompete all challengers. Tariffs are engineered to encourage companies like yours to invest directly in the United States. Hire your workers here, build your factories here, make your products here. You'll be glad you did, not only because we have the most productive workforce in the world, but because we will soon have the most favorable tax and regulatory environment as well. This is where tax incentives and deregulation come into play. You may have heard one big, beautiful bill floating around Congress. This bill is big and beautiful for Main Street America and investors alike. The president's signature tax legislation will prevent an enormous tax hike on Main Street by making the small business deduction permanent. It will also provide tax credits and deductions for research and innovation to stimulate investment in high-tech operations. It will restore 100% expensing for equipment while expanding that incentive to new factory construction. The objective? To accelerate investment in American industry. To make that investment as seamless and rewarding as possible, President Trump has embraced an ambitious deregulation agenda. This includes expansive permitting reform. The president doesn't want to just drill, baby, drill. He wants to build, baby, build. To that end, he has signed executive orders to reduce the federal approval process for new energy and construction projects from several years to just a few months. This simple reform will unleash the creative potential of America's builders. It will empower business leaders like you to put your capital to work as quickly and efficiently as possible. The building renaissance will be fueled by the president's energy dominance agenda. Energy is the base layer of all economic activity. That's why the administration champions an all-of-the-above approach to energy development to drive down the cost of doing business. I hope you can see the bigger picture now. The Trump economic agenda is more than the sum of its parts. Trade, tax cuts, and deregulation may be three distinct policies, but each policy is mutually reinforcing, and acting in concert, they push toward the same goal: to solidify our position as the home of global capital. The result of the president's economic plan will be more jobs, more homes, more growth, more factories, more critical manufacturing plants, more semiconductors, more energy, more opportunity, more defense, more economic security, more innovation. In short, more of all things we need the most. The president believes we can achieve more together. This is the abundant vision he has for the future. He wants everyone to be a part of it. Thousands of businesses are now catching the president's vision. Since he assumed office in January, companies have pledged to invest trillions into the U.S. economy. President Trump has secured more investment for our country in 100 days than President Biden did during all 4 years. Entrepreneurs, too, are starting to understand what the president is trying to accomplish. March saw one of the highest levels ever recorded for new business applications. Many of these men and women, like many of you, are grasping that America First is the blueprint for a more abundant world. For now, a parting thought. When I entered public service, I spent more than 40 years in the asset management business. There, one mantra guides one of the world's most successful investors: never bet against America. Warren Buffett coined the phrase, and it's been his lodestar as long as he's been in the game. Never bet against America captures a time-tested truth. The American economy is unstoppable. Throw whatever you will at our capital markets: the Great Depression, 2 world wars, 9/11, a COVID recession of the last few years, or sky-high inflation. Each time the American economy gets knocked down, it gets back up again. And it gets back up even stronger than it was before. U.S. markets are anti-fragile. Indeed, the entire history can be distilled into just 5 words: up and to the right. On a long-term horizon, it's never a bad time to invest in America, but especially now. The United States is entering a new golden age of economic prosperity for both Main Street and Wall Street, and we don't want anyone to get left behind. Come with us so we can build a more abundant America together. Thank you all.
Please welcome. That was Secretary Treasury Scott Bessent speaking at the Milken Conference in Los Angeles, talking about the economic vision of the presidency of Donald Trump. And Mr. Bessent sitting down with Michael Milken right now for a little fireside chat, little Q&A on the stage of the Milken Conference. Let's listen in.
A leading university, an accomplished fund manager, former professor, and distinguished career in finance and academia. Your range of life options.
He's got the Saratoga, folks. He's got the Saratoga. Wait, where's Palantir? You guys think Palantir 123.82. Palantir trying to make his way back to 124.
Was unlimited. What inspired you? A high pressure role.
I would agree on all the above. So, Mike, there was a long arc desire for public service. I had tried or considered going to the Naval Academy, and I was applying in 1979. I wanted to serve my country. Due to sexual orientation, I was unable to. So even since I was a teenager, I wanted to serve my country. And I'd had a great career, like many people in this room, in finance. The country had been good to me. And as a economic history scholar, I was shocked at what was happening with these budget deficits. So last year, 6.7% of GDP, highest ever when we weren't at war, weren't in a recession. And I wanted to come out from behind my desk and be part of the solution because I was afraid that 4 more years of that, and it was kind of a deeply cynical plan, I thought, run up the debt and then have to raise taxes and really stymie the American engine of growth, innovation, and opportunity.
Well, once again, we're very happy you took up that mission, and I can't think of a better person at this time to be the Secretary of the Treasury. Let me try. Over the years, we've had a number of Secretaries of Treasuries that were not really into financial markets. And so you're the right person at the right time. But it's interesting when I think about it, how do you strike the balance between the administration's goal of reindustrialization in the U.S. and the risk of isolating the U.S. economy?
Well, I think that they're not mutually exclusive. And as I've said many times, that obviously in this trade puzzle, China's the biggest piece. Where do we end up with China? And I said during IMF week in Washington, said, it's possible that we could, as Ray Dalio might say, do a big, beautiful rebalancing. That if we want more manufacturing, everyone agrees except Chinese leadership that they need more consumption. We could actually do that together. And then look, on the other side, that getting better terms of trade is not always a straight line. It's not always a pleasant process, but I think at the end, the trading relationships will be stronger. Our security and values ties will still be there. I look back and I think about the example of NATO and German fiscal spending. So I lived in London for a long time, ran the Soros office there. And since forever actually, that whether it was the French president, the Italian prime minister, people in Brussels were trying to break open the German piggy bank. And President Trump, not in a straight line, not in what anyone would call a diplomatic manner, has gotten NATO countries to step up and meet their spending requirements. I think these numbers are approximate, but I think only 25%, when he came in 2017, only 25% of NATO countries were meeting their spending requirements. Now I think only 25% aren't. So the Germans, for the first time, are going to allegedly do a big fiscal spend, which will drive European growth. And so can we do the same thing on trade? I think so.
So let's talk maybe about a specific situation. You recently signed an historic economic partnership with Ukraine. And as you said, there was a few bumps along the way. Can you walk us through the role that the Treasury played and what is expected to come out of this agreement?
And let's walk backwards. That I was bemused, gratified to see that on Saturday, as I was coming out here, Friday, as I was coming out here, Washington Post lead headline was Russia now nervous after U.S.-Ukraine signed deal. And that I believe that this would happen in February. President Trump believed that it would happen in February. And this was President Trump's idea. He likes negotiating, as you know. A lot of people in this room probably know. And he likes creating negotiating leverage for himself. And the Ukraine investment partnership, the economic partnership, was his idea. And he believed that it would do several things. One, it would create more leverage for him with the Russian leadership when it was time to go to them. So the idea was start with Ukraine, sign a deal that shows that there is no daylight between the U.S. and the Ukrainian people. It would be a symbol to Ukrainian people that the U.S. is still there. It would be a symbol to a tired American public, skeptical of more financial commitments, that it was possible to have a shared prosperity with Ukraine. And then it would, in essence, be a tacit security guarantee because of the economic partnership. I went to, and just to give you the timeline, so he tasked me with drawing up the document, speaking with Ukrainians. I thought it was a good idea to actually go to Kyiv. For anyone who hasn't been, you fly to Poland, you take a 10-hour night train into Kyiv, and you do that to keep from getting shot down, and which is good. And everyone was saying, "Oh, like this isn't a good deal. This isn't a good deal." And I said, "Well, if it's not a good deal, why did the Russians bomb Kyiv for the first time?" So I went on February 10th. The Russians bombed Kyiv at 4 in the morning for an hour for the first time since November, because they knew the train arrived at 8. And so before I got there, so if the Russians, if we were pro-Russian and this was a terrible deal for the Ukrainians, why didn't the Russians want it signed? So then President Zelensky elected not to sign it that day. He elected not to sign it at the Munich Security Conference a few days later. There was a little incident at the White House some of you may have seen. President Trump called it great TV. And when the deal went south that day, and I actually think in terms of the final deal, and Mike, I'm sure you, everyone in this room has seen it, that sometimes the blow up, you end up with a better deal. So February 28th was the blow up in the Oval, and what was going to be signed that day was actually just a 4-page memorandum of understanding. After that blow up, we at Treasury made the decision to try to make the blow up into an opportunity. And my team, I instructed my team to go straight to writing the full agreement, which is 6 different agreements, varying lengths, but hundreds of pages. So we worked on that document. And then when there was the kind of recovery and trust between President Trump, President Zelensky, after the meeting at the Vatican, we signed the deal a few days later. And look, I think it's win-win. What it is not is one of these rapacious Chinese deals. Sign here, it's loan to own. You're going to default on the debt. We're going to own all your minerals, and that's life. This is economic partnership. They put in assets. We put in capital from the DFC, American best practices and know-how, and it's 50-50. It's equity, not debt. And some of our European partners were criticizing me at the G7, and I said, you know, guys, if you want to trade, if you want to do a debt for equity swap, why don't you write off your Ukraine debt and we'll let you into our partnership? No one's called me yet.
Well, I think what struck me, Mr. Secretary, was this major oil find off Guyana. And Venezuela rattling the sabers and had sent a couple military ships. The U.S. then asked them what you're doing because that's Exxon, that's a U.S. company. And I think that to me underlined part of the strength of this agreement you struck. Let's talk about one element that many people have been concerned about, and that is, what are the key components of deregulation? I know it's part of your economic strategy to spur growth. Are there any specific regulations that are at the top of your list for reform?
Yes, as I said at one of the smaller group meetings last night, maybe a few people in the room interested in private credit. And Treasury is taking the lead on financial deregulation. And I think private credit is an incredible new bolt-on to the world's deepest, the breadth and depth of the world's deepest capital markets. But the growth of private credit tells me that the regulated banking system has been too tightly constrained. So we have set up at Treasury, I convened something called FSOC, Financial Stability Oversight Council, and President Trump tasked me with helping him choose the leaders for the financial regulators. So they have installed a new vice chair for supervision at the Fed, Mickey Bowen. We are going to have a new OCC head, FDIC. Paul Atkins has just taken over the SEC. Brian Quinn is at CFTC. So the regulators are aligned, and we're going to be like safe, sound, and smart in redoing regulated financial entities. And then, as I mentioned in my talk, energy, that's a pretty easy playbook, but the real impetus is going to be on permitting across all industries, and that's where the EPA comes in, putting pressure on state and the federal government's going to put pressure on state and local governments to speed up the process, the permitting process. So, what's the use in giving 1 year depreciation if it's 36 months to break ground? One CEO recently told me, he was talking about the difference between doing business in Texas and Illinois. He said, we started a project in Texas from the day we went to the city of Houston to talk about it to the day I cut the ribbon, took 2.5 years. In Chicago, we are still 7 years into the planning process. So we want to make everyone look more like Texas.
Well, you're in an area here called Malibu where maybe in 15 years you can build a house. So we are very accustomed to this. Let me talk about another issue. It was in 2017 that our theme of the global conference was building meaningful lives. Part of that was a reflection on the disruptions we saw emerging from advances in AI, robotics, digital assets. The world we felt was heading for significant change, and we scheduled dozens of sessions around that area. 8 years later, you're now the Treasury Secretary, navigating the nation through these various changes. Give us a broad view as to how you see these issues today.
Well, I said in my confirmation hearing that we have to win in AI and quantum, that if the United States doesn't take the lead, if we don't win, everything else doesn't matter. That if we lose the edge there, and I think China's catching up, which is natural, but I think we will maintain our leadership on that. And again, what we're trying to do is not pick winners and losers. We're just trying to set the environment for the best opportunity for our entrepreneurs to succeed, stop intellectual property theft, and in terms of making it accessible to all Americans, I think that's going to be very important. I was out on the campaign trail with President Trump, and I was struck by there had been a big migration by the venture capital community to President Trump. So on one side, you've got the VCs, the most innovative, the people in the world. You got Elon Musk, the richest person in the world. And the president's penultimate rally that I went to was in Pittsburgh, and these steel workers showed up, and they got their vest on, they've got their hard hats, they've got their families. And the real idea is to make sure that innovators can innovate and steel workers can have the same quality of life and opportunity, and that their kids could be the Silicon Valley entrepreneurs, or they can stay and have the same life or better that their folks had in Pittsburgh.
Well, that is a great goal, and we hope we achieve it from that standpoint. Interest rates. You've often talked how important that 10-year interest rate level is, and When I look at financial markets over a long period of times, I can sometimes identify when that individual had come into financial markets by what period of time and the interest rates. So in the 1970s, particularly, the volatility of financial markets, you saw over the next decade, many of the people that were CFOs became CEOs because how you financed your company allowed it to exist. In the last few years, we've lost 3 as independent companies, major financial institutions, due to the fact that they had bought $250 billion of US government intermediate securities and borrowed overnight. So when you look at interest rates in the 10-year, and as I mentioned to you, I got this app on my phone that anytime the US government's prices change by more than 2% in 2 hours, off my phone goes. So in the 1950s...
Please don't share that with the president. Please don't.
So in the 1950s, if you were trading governments, it was like watching paint dry. You could see an entire variation of maybe 2% in price in an entire decade. We now have seen a variation of more than 2% occur in more than one day. How do you see the importance of the level of interest rates in our economy and what you want to achieve?
I think that I'm not going to talk about the Fed. I've said I won't talk about their future mistakes. I'll only talk about their past mistakes. So I thought it was important to focus on the 10-year, and the 10-year has a lot of things wrapped in it. It's the short-term rate, it's the term premium, and we're focused on creating the best environment for stable rates. And I think a lot of what we saw in April was this periodic unwinding that I've experienced, you've experienced, most people in this room have experienced in their career. I'm a big believer in the Hyman-Minsky, stability leads to instability. So I think we probably had a very stable period. A lot of leverage players built up very large positions. There was an uncertainty shock. They're out. But what we're trying to do is to go back to the Trump 1.0 non-inflationary growth. So I think if we can put non-inflationary growth in place and take away, back to your initial question, why am I sitting here, is to take away the credit risk of the US government, then I think rates will naturally come down. And as I've said before, there's an opportunity here that if we can do it, the goal on one side, I call it reprivatizing the government or reprivatizing the US economy. On one side, we want to bring down government borrowing slowly, maybe decrease the deficit by 1% a year. So by the time President Trump leaves office, we're back at the long-term average of about 3.5% deficit to GDP, and the denominator grows faster than the numerator. Debt to GDP goes down. So we're decreasing the government in the economy. At the same time, we are right-sizing government spending and government employment. And then on the other side, through financial deregulation, we're re-leveraging the private sector. And then the excess employment that was shed in the government economy can go to the private sector. One thing, I've never lived in DC before, but one thing that really struck me was within a 10-mile radius of DC, 25% of the nation's economy pulses through there. And that's too much. Traditionally, it's about 21%. And we've got to make sure we have a stewardship obligation to make sure that that is spent wisely.
So we were making a decision where to have them.
All right, guys, that is it for me. I'll put the link in the chat if anyone wants to keep watching it. I don't think there's anything that interesting happening in this one. It seemed more like a, I don't know, kind of like a fireside discussion about Bessent's ideas and thoughts, not really something where he's making statements that would affect the broader market. So I'm going to get out of here. I'll be back at 3:30. Got some things to finish up. And then we've got Palantir earnings after the bell. Going to be very, very exciting to see what ends up playing out. And I think it'll be a good quarter, but we're going to all be here again on the journey to see 123.76 on Palantir as we get into earnings. Again, I'll be live at 3:30. I'll have some guests with me, and we will begin the coverage. And then at 4 p.m., we're going to get results. And then at 5 p.m., we will get the call. We also have HIMS today after the bell. HIMS right here is at 41.20. That's green. We're not really going to be covering HIMS today. I mean, we'll look at how the stock moves, but this is going to be a Palantir earnings stream. So hopefully there's some other people out there covering HIMS. I will cover it tomorrow on the market open. We'll go in depth on their earnings. But today mainly is going to be about Palantir. And as soon as we get their numbers, we'll be analyzing it and breaking it down on the show today. Word of the day is, I know this word, quintessential.
Quintessential.
Of or relating to the perfect embodiment of something. She dreamed of the quintessential Paris morning, a croissant in one hand and a book in the other. The family dinner was the quintessential holiday gathering, some laughter, some arguing, and too much pie. I've heard of this word before. We've all heard of this word before. Hopefully, Palantir earnings are quintessential enough for us to see the embodiment of a 40% growth quarter, which is what I think there's a shot we get. But later today, we'll all be here on the journey together and get to see what we get for Palantir once again. Q1 2025. I'll be live at 3:30. Thank you, everybody. We'll be back, and it'll be a big day. Super Bowl. Always get a little bit of anxiety and nervousness going into this one. Again, it's not even about the stock. It's more so about, we've been doing this thing for like 4 or 5 years now. So it's like we were there when Carp banged on the table on earnings, and that was a tough quarter. $8, 13% growth, no video conference. Carp's banging on the table because some analyst asked him a question that he doesn't like. It's from that to here. It's pretty damn incredible. So thank you, everybody. We'll be back 3:30 p.m. and we'll keep going with Palantir Q1 earnings. Bye, everybody. Have a good one.